until later, maybe as late as the former president is expected to appear in court on Tuesday. We might learn it then. Two sources tell NBC News that there are about 30 counts of document-related fraud charges in this indictment. We'll wait to see what those are when it's unsealed. The former president issued a blistering statement about all this last night, saying, "This is political persecution and election interference at the highest level in history." Now, we don't have, as I say, those specific charges in the indictment yet, but we do have word from Trump's attorney confirming that he has been indicted. And we do know that the Manhattan District Attorney, Alvin Bragg, has been examining the circumstances surrounding a $130,000 hush money payment to former porn star Stormy Daniels back during the 2016 presidential campaign. So there could be charges in here around falsification of business records. There could also be charges around campaign finance violations. We'll wait to see all of it. All of it now raises the specter of the former president of the United States being arraigned in a New York City courthouse, fingerprinted, photographed for a mugshot, even as he continues to receive protection by the Secret Service, who will be there with him in Manhattan. In a statement about it, Manhattan District Attorney Alvin Bragg said, "We contacted Mr. Trump's attorney to coordinate his surrender to the Manhattan DA's office for arraignment on a Supreme Court indictment, which remains under seal." And the question, Carl, that no one can answer is just how is this indictment going to play out politically? How will it affect the former president's political support? Is his base going to rally around him in his time of need, or will his supporters start to say, you know what, this is one thing too many, we're going to look for another Republican alternative? We just don't know how that's going to play out yet, Carl. It's all to be determined. We'll see what happens in Manhattan next week.
All right, Eamon, thank you. In the meantime, Digital World Acquisition Corp, the SPAC, DWAC, is surging today. More attention, I guess, on that. Micron shares are falling amid some fresh scrutiny here from Chinese regulators this morning. Let's get to Christina Partsenevelos with more. What do we know about it, Christina?
Well, Chinese regulators are targeting a U.S. company, and actually the timing may be suspect. So today, Chinese regulators said they plan to look into Micron's chip sales to prevent network security risk caused by, quote, hidden product problems and ensure a safe supply chain. And the reason why I bring up timing is because Taiwan's president right now is in the U.S. visiting our country, and Japan also just announced it's blocking sales of advanced semiconductor equipment into China following
I tried to sell FRC yesterday for next week. The puts didn't open. It didn't fill. Sucks, because now it's like going up, so that's free money essentially. Brutal.
Shouldn't have an immediate impact to revenue, although you can see it is affecting the stock down 3%. As of fiscal 2022, China and Hong Kong represented 16% of Micron's total revenue.
CCL doing.
With Wedbush's Mark Lee telling me just maybe 30
Still
minutes
up.
ago that if China cuts off Micron,
Still
Micron
pumping.
should be able to find
CCL.
demand from other regions to fill the gap, but expect a short-term impact.
Can't go wrong with this stock this week.
In China. And as for China,
until red, green, barely.
Over Micron if they want to, which could also drive up memory pricing if you're limiting one of the three main exporters out there. Lastly, Mizuho's trading desk suggests more headlines like this should happen in the next several months or so, given all of the U.S. aggression to limit China's ability to grow its domestic chip supply.
So spending already came out, so I guess that's it for the day then. We have a couple of Fed people talking at the end of the day. That's about it.
Really, I was going to ask you,
Data came out.
Specific here that it would be singled out versus some of the others, and would make it more sensitive to this type of review.
The specific thing is that China can work around Micron, whereas China can't work around NVIDIA, AMD, and Intel. Yeah. So should they go after those companies, you'll have a bigger impact to their revenue lines, and then China would be cut off. So, go after the smaller player right now, threaten the United States, show they mean business, and then see what happens. But I wouldn't guess that they would go after the big guys anytime soon, but who knows with all of this aggression going on between the two countries.
That's what I thought. So Kramer said buy AMD and Meta, and I think they're both red today. Oh, okay, Meta did go green. Damn, it was. I swear it was red before. It was red. Start the day. But I mean, I don't know who the fuck's buying Meta at this. They're not even going to be doing the metaverse anymore. So. They're going to go back to Facebook? You know? Fuck. Who knows? Morning boss. Weird. My chat is not showing, bro. Give me a sec here. Something's up. There we go. It's hidden behind.
We have been offering superior nationwide coverage for over 25 years.
Can you guys do me a favor and hit the like button if you're in here? Just a quick favor with the old like button. Gotta fucking pander to the YouTube algorithm. What's up, Lori? Coin just went ham. Oh, full blown market pump here.
With a flexible data plan starting at just $20 a month. There are no hidden fees or fine print. What you see is what you get. Plus, you can keep your phone number and activation is free. Look no further than Consumer Cellular. Visit consumercellular.com.
Crazy, but I mean, who gives a shit? It was 63,000 earlier in the year. It was 63,000. It's 28.5. Let's go, baby. We got back half of the money we put in because we were chasing it at 65 because everybody said 100K. So we bought it at 65 and then it went to 16 and we almost committed suicide. This is my impression of mostly everybody in Bitcoin right now.
Experts aren't just healthcare advisors. They're also your allies. Read the insights at key.com/healthcare.
Size at 81 on it though, so reverse to 65, like 50 probably. If I had to guess. Okay, it's not just going to continue to go straight up. It just won't happen. Will it go to 65.27? I don't think so. I think it goes 65.50, some kind of like psychological number.
From consumer discretionary, Starbucks, Ford, hotels are moving, industrial stocks are moving. So the leadership is changing as we end the quarter. I don't want to take anything away from big tech. This is really breathtaking. If you look at like the big
should be subscribers only, not members only. No one's a member. This channel doesn't have members. So literally anyone that subscribes can talk, I believe. Where do you see that? Like, I don't have channel members. This channel doesn't have. You have to make money. You have to be monetized to have members. So definitely should be subscriber only. Where do you see that though? Where do you even see that?
Look at this: Schlumberger, Delta, Boeing, Boston Properties, really? Ford.
Yeah, subs is fine. They just hit sub. It's free.
Consumer discretionary stocks. Those
Up
are the
of
ones
chat.
that are moving forward. So what's happened suddenly
Up
to
of
account
chat.
for some signs of leadership
Subscribers
change?
only.
Prices
Yeah,
of
again,
real
like if they just hit subscribe, they can talk. It doesn't cost anything. It's free.
Are back to normal in the bank situation, and the yields are higher. So is this Sarah? Is this the whole Goldilocks case? Is it too good to be true here?
Yes.
This modest
Real
recession
simple.
is going to bring down.
You go down here, and I don't know where the hell it is. You hit sub. I don't even know. There should be a button that just says subscribe. Like, it's fucking not a big deal. You just go to my profile and hit subscribe. I don't know how to. Here, actually, I do. Here, I do know how. New incognito. All right, so you'd subscribe.
What to do next here? KPMG chief economist Diane Swonk.
Yeah, it's literally you just click this button and then you can talk. That's all.
This past month for the economy.
It's very important.
But I'm pretty sure 99% of the world knows this by now.
Second of all, we know that the bulk of
A lot of people just lurk. They don't talk. They're just here to listen to the news. listen to whatever the hell I'm talking about.
And at this point in time,
Oh,
I think that you can calibrate it even by just moving a quarter point at each
550, I
meeting
think,
by
is
the
a
Federal
reasonable
Reserve, which
target
is what we've heard in
for
unison,
the
even from
cooling
those
of
who are
RSI if
bullish
it
on
wants
the
to cool,
Federal Open
because
Market
Mara
Committee
is not.
yesterday.
Mara is
Susan
almost
Collins, who was
90. I
there,
wrote in
and
the
she said,
Discord
there's more work to be done.
that it could
We're
go to
gonna forget
90,
as well.
so
All of
which
this
is fucking
crypto,
crazy.
we're still going to raise
But
rates at a time when I don't think they need to cut rates yet.
where
But
did I
we
say
don't
that?
have a lot of view on the finish line. And I said, inflation is like a marathon, not a sprint. We haven't yet hit the hardest mile, and we now can't
Still
see
popping. RSI could RIOT could reach RSI could reach 90. That's pretty damn close. It's 87, so which is very high. But I mean, the second it hits that, it just drops it. I'm telling you right now.
I think there's a lot of potholes in the rest of this marathon that they don't want to get tripped up in.
Subscribers only mode, yeah. So just hit subscribe, bro.
Of the economy, a chilling to a freezing point is not what you want to have at this stage. You want to cool the economy,
Right.
and I think
So,
that's
Diane,
a very difficult high wire act.
Yeah. No, I was just going to say, I think the market's with you. I think the market,
Subscribe, bro. I can see you, Tone Man. If you're in here watching, you didn't hit subscribe. There's a big black button that says subscribe. You have to click it. You are not. You're maybe subscribed to free from it all. This is my new channel. This is not my old channel. I can see the button. It says YouTube will literally unsubscribe people. It will also unnotify people. There's all sorts of channels. Channels with 300,000 members that say, because of shadow banning, please hit the notify. Make sure your notify's on. Please subscribe, shit like that. So,
there is no garden variety recession out there. It can get out of control.
I don't know why they do it. I have no fucking clue.
That doesn't mean the Fed is going to be cutting to zero unless we have a full credit market seizure, which of course they want to avoid as well. And I think the financial markets have gotten a little bit too much.
See, I'm not holding it, but the CTB is insane on it right now.
It's not a Goldilocks scenario. I think the risk of a misstep is much higher, which will also hit profits as well. And it's not just the Fed going back to zero interest rates unless they really mess up the financial stability situation. And I don't think that's where they're at either. But I think the bottom line is that we're talking about a scenario where the Fed is still hedging against averting the mistakes of the 1970s, not snuffing out inflation.
I guess they're ramping into the weekend on crypto. You've got the SPY up. You've got DJI up. You've got banks up. You've got crypto up. Everything is up. Yeah. No, I'm good.
What their goal is.
Right.
On
Diane,
that.
a few weeks ago when we were in the depths of the banking worries, we were getting some eco data that still looked fairly robust. People were saying, oh, don't worry, that's going to cool off with the lagged effect. Do we now need to look at those robust numbers more at face value?
It's really a good question. The measuring of the data, we know that there are skews in how we can measure the data coming out of a pandemic so rapidly. We're not good at seasonally adjusting the data with climate change and the reopening of the economy. And then you layer one other issue on top of it, and the response rates and revisions to the data have been quite substantial. Other economic data, and we're looking at everything we can.
Bunch of followers. Crowd was amazing, devious.
The overall data
Moo, Upstart, Soon, SoFi, Tesla. Everybody's watching shit. It's awesome.
Important to take into account too, and the data is backward looking.
Fucking coin though. 82 RSI now. Shit. Getting ready to fucking short that. Might even do it now.
How about we're gonna have the markets close next Friday for Jobs Friday, but what's your outlook for the print?
I think we're still going to see a good jobs numbers in March. It takes a while for this is more of a slow-moving kind of train wreck, sadly enough. We're still going to see fairly robust jobs numbers, but our analysis suggests that the backbone of the job market, particularly in the post-pandemic period, has been from
YBCO slaps back at Elon Musk and others plea to pause AI. Shareholder notice. US 1 million tech jobs at risk.
and go negative, that's something the Fed has a goal of achieving in raising the unemployment rate, but it's very hard to calibrate.
So look at it.
This idea that
It's like squeezing. 0% CTB too. What?
And you've got credit tightening in
What
the pipeline.
the
It's
fuck?
really not very a good sort of benchmark. People keep looking back to 1994 when the Fed was preempting.
Can't even short it now. I just tried.
Or
It's
combating
67.17.
inflation. So the risk of an overshot
It's like not filling.
is quite high.
God damn.
Thank you very much.
Try to short it. She's constantly moving it. Won't let me short it. Man, 20 cents missed right there. Quick scalp, 20 bucks. Damn.
But is a ban still imminent? And what would it mean for big tech and the likes of Meta? We're going to discuss that in a moment.
Okay, still there. Let's see what happens, I guess.
These days, it's easy to feel stressed about money.
66. Try to close it out for like 66. See what happens.
Check out your FICO score for free.
I mean, this 84 RSI, I'm not buying into that holds. That's up there. I mean, I don't even have room for RIOT. I guess I could get rid of this for now.
Results will vary. Savings offers and approvals not guaranteed or available in all states. See website for details.
I'm Howard Mackler of GetRefunds.com. You may have
It's
heard me
67.50.
talk about the payroll
Oh,
tax
I guess that
refund
wasn't
program that
optimal
gives
entry.
businesses up to $26,000 for every employee they kept on payroll during COVID. But today, I'm not going to do the talking. I'm letting a real Get Refunds client tell you everything.
I'm Evan, owner of Laveau DWI Law. I heard about the payroll tax refund and GetRefunds.com on the radio. When COVID hit my business, everything shut down.
Smoked.
Revenue, phone calls, all business. The new cost of operating during COVID hit hard too. I had to personally fund my business. GetRefunds.com got me approved for a payroll tax
66
refund.
is the low, and they're going to bring
allowed
up
me to recoup
RSI.
losses and costs, even where I had
Or,
positive income in the later quarters of
RSI.
COVID recovery.
13
If
EMA.
you have a business, you should go to GetRefunds.com and start your claim right now.
GetRefunds.com helped their business, and we can help yours too. Go to GetRefunds.com and see if you qualify in just 8 minutes.
I think I sucked them yesterday. I think
powered by
I am.
Innovation Refunds.
Oh, no.
Supply chain is the new buzzword, but not for us. DHL Supply Chain is the
okay, good.
world leader in delivering innovative end-to-end
Yeah, maybe I
solutions from
do.
e-commerce to labor shortages. We're all in on innovation. Our technology and experience give you the power to accelerate your supply chain
75,
and deploy
67?
best-in-class solutions, all supported by our market-leading
Just say
workforce.
now.
So you can
Because it actually went up. It went up quite a bit right from the short.
no innovation, no boundaries.
I don't want to excessively hold, but you know that's probably about like 66. Just seems to be like a psychological level. It's like 8. Like VWAP is definitely support right now. VWAP, almost positive. There we go.
Exclusive coverage of the 2023 Masters starts Monday, April 3rd. This Masters moment is brought to you by UPS. UPS is an international partner of the Masters and is proud to caddy for your small business. Be unstoppable.
Golf is a game of patience, strategy, and most importantly, precision. The slightest adjustment can make a huge difference. As the international partner of the Masters, UPS knows business owners are also looking for an edge. Innovation is the difference between good and great. And next level e-commerce with UPS will help you get your
Closed it out because I want to see what happens here. I'm not sure. I feel like 67 is some bullshit. Because coin hasn't moved like as much as Mara. Usually coin is the leader, not Mara. What do I say? I don't even fuck the SPY, man. I still think SPY should be 235. 235. And it is somehow 406. So no clue. I don't have any clue on the SPY. Those day-to-day options, they've really fucked up like the SPY. Like, I don't know how else to put it.
Understand a little bit more than Steve's audio. We're going halfway around
all the way to Beijing. We'll work on getting Eunice back. Meantime, back in the U.S., Lawmakers continue to criticize Chinese-owned TikTok over its security concerns, despite TikTok's lobbying efforts, spending, now we know, more than $13 million since 2019. Joining us on set to discuss this and a bunch more, Wall Street Journal senior personal tech columnist Joanna Stern, also a CNBC contributor.
66 probably would have been about 75 bucks. I'm not looking to make big moves today though. Too much. It feels too bogus today. Today feels really bogus to me. Feels real bogus. Like, I don't know how else to put it. Like, look at these charts, guys. Look at these charts. Are you fucking kidding me right now? You gotta be kidding me with these charts. Like, okay. Because Bitcoin went up 500 bucks? Yeah, okay. I'm sorry, Mara, but you're on the borderline. Don't even make money. Oh, okay, it did break. So it's having a hard time, but it's resetting. You see what I'm talking about? It's trying to like reset while holding. Mara's been doing it all morning. So this is, it's tough. Yeah, fuck. It just keeps going up too. Mara is more beat up than the others, but again, like, so with the company, they mine Bitcoin. So the only way to make money is to sell the Bitcoin they mine, or if they hold it and hope Bitcoin goes up. But they've been holding some of that 60K Bitcoin, so they're down halfway on that. And there's only 8% of all Bitcoin left in the world to be mined. When that runs out, and they're competing with every other mining company. It's not like they're the only miner. Fuck 'em, you can mine it on your cell phone if you really wanted. You'll ruin your cell phone in short order, but you can do it. Holy shit, just keeps going. Anyways, when that runs out, now what? Now what's their business model? They don't have one because most new crypto is like they're banning mining. I want to say Ethereum has gotten away from mining and it's doing stake of proof or proof of stake, however they want to call it. So, I mean, even with that, it's like I just don't see how Mara and Riot exist in the future. Coin is a platform where you can trade and exchange Bitcoin and other coin. It's not a miner. Riot and Mara are miners, so they're just going to eventually be gone, be zero eventually. I mean, there wouldn't be any value once the coin runs out.
But right now, out of the gate, not a good first step for them.
Have you been impressed with Bing traffic or not? I mean, we were looking for it to either be
It's
sustained
Riot.
or be a blip. Is it one or the
Since
other?
Riot is now 80 RSI too.
I think Microsoft is happy. They're certainly happy with the number of people coming to Bing, trying it out. Now trying out, they launched this image creator last week.
3 to 825, is that really worth a short? 100 shares, that's 25 bucks. I mean, but that's $8,000 worth, right? Or $800 worth. So $25 on 800 risk? Cent? I guess that's a 3% swing. I don't know if that's good enough. But VWAP is certainly where it will go.
All right, we're throwing all the topics at you that you're working on. I know you're eager to talk about Apple and the delay of the headset because this is what the next big thing.
Go for it. Go for it.
There's a big question right now in the
Go for it. We'll do 826. We'll do it. Just try to do a 3-cent swing here. Fucking VWAP just went up. So we'll do 820, 829, I think. We'll just do a quick scalp just to see. I like to test whatchamacallit.
Then we've got Mark Gurman at Bloomberg saying WWDC looks like this date. Should we wager? Should we
I like to test.
I mean, they're famous second movers, right?
How well some of these obey pretty much tried models, I guess you could say. Or puts on CrowdStrike a good move? I don't know. Because CrowdStrike is like an employment company, right? So they help people find employment. So as employment keeps going up, they're just going to become busier? I'm pretty sure that is, or is CrowdStrike AI? I can't even remember right now. Strike. What the hell is it?
Okay.
American cybersecurity. Okay. All right. $137 stock for cybersecurity. Okay. And I was in some other cybersecurity stock like last year, and it just got destroyed, like half the value. And I remember reading up on it, and it was like awesome. They had like one of the 4-star generals was one of their CEOs. There's only like 10 active 4-star generals in all of the USA. So I was like, one of their CEOs is like one of the highest security guys in the whole country. Okay. And actually, how many? Let me Google that. How many active 4-star generals? Okay, so sorry. There's 39. There's 39 active duty ones, 13 in the Army, 3 in the Marines, 10 in the Navy, 12 in the Air Force, and one in the Coast Guard, and 2 in the Space Force, which is new. So sorry. Okay, so either way, there's almost none, right? Like there's very few 4-star generals. So I was like, I just thought that was a good person to have on your company when you deal with security, because he's gonna fucking know security threats. He's gonna have connections. Someone's gonna say, "Yo, bro, we're getting attacked here." Fucking the power grid that just went down. Yeah, that was a cyber attack. Like he's gonna know that shit. That stock still went down like half. So I mean, I don't know. Would I want CrowdStrike? Probably not. Myself? I mean, it's up. I bet you it's up like, what's that? 200%? 600%, even more. Jesus Christ. Okay, so it really moves on options. Not on options what I'm more familiar with, right? I don't really, not what I'm following.
Of Chinese companies trying to sort out their IPOs before today. So 7 Chinese companies listed in the U.S., and it doesn't sound like a whole lot, except that there were 6 companies in all of 2022, guys, that listed in the U.S. because of all the geopolitical problems.
Wow.
This goes back to companies that they're trying to pump, because they're running out of companies to pump. Meta can only go so high, and Apple and Nvidia and Microsoft. There's 7 companies that are green on the year, I guess, in the NASDAQ. 7, and 493 are red. So it's like they need to move money out of those and into some of this stuff. Some of the stuff that's been beaten up, I guess. I pull up the chart. But I mean, to me, that's still very high price when you can get other cybersecurity companies for like $2. They do the same shit. I mean, I have fucking Norton. So, Norton stock ticker. I don't even think it has a ticker. Oh, Gen Digital, it does. Okay, Gen Digital is Norton. I mean, like everyone I know has Norton. That's what you have. Norton. Are monthlies? Yeah, they are monthlies. No options activity whatsoever. So why is CrowdStrike bumping and Norton isn't? You know what I'm saying? What do you have on your computer? McAfee and Norton. That's what you have. For some reason, July's have a lot of activity. I mean, like, that's pretty good. It's $17 and you can sell a 17 strike and get paid $1.20. $1.20 divided 17. So that's 7. I guess I shouldn't say that's pretty good. 7%. It's not bad. Go to January next year. See what January's got. Nothing. Holy fuck. No leaps? Brutal. Nothing for December. Nothing for October, probably. Holy crap, yeah. So Gen sucks. I don't know. Why is all the money in one? You know what I'm saying? I don't know why. Gen. I mean, I'd rather have Norton for $17 than CrowdStrike for fucking $137. Would I buy puts? Probably not, because it's got momentum behind it. You know.
This is not an offer to sell a franchise. Franchise offerings are made through the franchise disclosure document. Ask for details.
Hi, I'm Joe Perillo with JoePerillo.com. We know many of you are searching for just
Someone took a bearish stance.
That's why I want to tell you about JoePerillo.com. At
They spent
JoePerillo.com, you could browse our huge selection of curated luxury vehicles. JoePerillo.com is based in Chicago, but we ship cars all
spent
over the
265 grand on puts. So, I mean, that's a lot. That doesn't make them right. Oh, it's hard for you to see this probably. Doesn't make them right. And then they hedged it. They hedged it with 4 calls, so they're 60K to the downside. So they did a strat, right? They did a strat just like we do. And their strat was, fuck, FRC's still going. Man, that pisses me off. Their strat is 60K to the downside. They're playing both because they don't know.
S&P sector is up about 20% since the start of the year. That NASDAQ QQQ ETF up about, again today, you can see up about 2/3 of 1%, led by cyber and software-related names. Datadog is higher, Atlassian higher, CrowdStrike, Zscaler among some of the leaders so far today and on the quarter as well. It's been a giant quarter for the semiconductors, the popular SMH ETF.
See it as a squeeze, no. These bank stocks don't have any CTB. FRC has 23%, which isn't nothing, but it's not, you know, it's not Lucy, 688%. In terms of banks, that's very high. But in terms of, but I'm trying to sell cash secured puts on it. But unfortunately, it's pumping. I tried to sell next week, it didn't fill. Like this, you would have made a shit ton of money on MCB selling cash secured puts on it. Yesterday, you would have made a ton, 75%, because these things were going. This was 40 cents, now it's 10, so that means you make 30 cents a share. 30 cents a share is a lot of money overnight for a no risk position, 250. It wasn't going to go out of business overnight. Wow, 95% it wasn't anyways. Same with the FI. The FI was 60 to $1. The 750 was like $2. Closed at $1.20, and now it's only 51 cents. So that's 70 cents a share overnight. Like insane, right? EVGO is up again. This is what I said yesterday. Holy shit, still going. Still going. Still going, man. So this was an earnings one, and then there's Go EV as well. Bring this one in our earnings plays, which I got to get the other earnings out today. Oh yeah, hit that like, that'd be great. Appreciate it. Looks like they are holding this bad boy. This is a bull flag on coin. This is just insane, is what that is. I don't even know. I'm trying to get out at 8:29 just for a quick scalp, but I might bring it up to like 8:33, something like that. Because as this holds, this will come up. So I don't really have a choice. I have to keep bringing my bottom up. Crypto always seems to run on the weekends now. Plain and simple. Because the markets are closed and people are degenerate gamblers. They need something to play. So what do? They go to play the fucking crypto. If the markets were open all weekend, I don't think much people would care about crypto anymore, to be quite honest with you. They just wouldn't care. Because they'd have a lot of selection and a lot of choice of actual companies, where crypto is basically a bunch of bullshit, garbage, the scammer shit. None of it's legit. Even Bitcoin's fucking a scam. Straight up. They've converted used and spent electricity into somehow monetary value. I don't. You got me.
That's what the script says. So if I get a Discover card right now, I can earn twice the cash back. Apparently.
Was I just gonna check?
Unlimited first-year cash back match.
What was I gonna check? Man, see, this sucks. How the fuck is this holding still?
Follow your school on our exclusive Power 5 conference channels, 371 to 375, and the SXM app. Included with all of our trials and popular plans. Only on SiriusXM.
Good Friday morning, and welcome to another hour here of Squawk on the Street. I'm Sarah Eisen, along with Carl Quintanilla, live on the exchange. Setting the agenda for us today. Satori Funds, Dan Niles, not believing in the bounce. He says he's starting to short names in the financial services sector after the recent rally. He joins us in a few minutes with stocks in the green after lower than expected data.
Plus, is commercial real estate the next victim of the banking crisis? We're joined by the CEO of REIT East Group Properties and commercial real estate titan JLL.
Taking a look at stocks, though, on this final day of the week, month, and quarter, and we're going to end on a high note in what has been a very positive run for stocks. Look at the S&P, it's adding 0.6. It's a broad rally again today. More stabilization in the banks, though. The banks are the hard spot of March and of the quarter so far, down more than 20%. Though the NASDAQ, if you would have told me
just yesterday, you could have got 25% more for your risk on this ticker, and now, unfortunately, like these were paying about 8% yesterday, and now they're down to like 5%, 55 fucking cents on 11, which 11 is, yeah, it's 5% now from 8, which is a lot. It's a lot of a drop. No problem, Alanis. And they're saying it's safer, but somehow it's still only $14, right? You know what I'm saying? Why is it only $14 if it's so safe all of a sudden? This is coming down to what I was trying to get out at, 66.69. Sorry, 66.80. What did it just hit? 66.71. So yeah, would have did okay there. Just quick scalps on these because they're full bullish. Okay, there's no. These aren't like, look at the gap here. You have, look at this massive. You have a 45. You have a 25-cent gap there. You have 13. You have 660. You have a 40-cent gap on coin. You have a 16-cent gap on RIOT. So you have these massive gaps, right? Which are probably gonna hold until it checks. I don't know where it's gonna check. It could check. This could run all the way to $10 today, and then it checks fucking, which would be like 20%, mind you. And then if you know at some point along the way it checks, like I don't know. I'm just assuming it's got to be pretty close to now, especially at this price. With this RSI, it's just got to be coming. I might even actually short another 20 shares, 25 shares, 860. Like, how's this gonna hold? This can't hold. Give me a break.
So far, and right now we have this window. Fed pauses until the first hike have historically been positive for the market. I mean, I don't know what we believe right now. Until the first cut, I'm sorry. Yes.
Son, it's in the Discord, Brandon. Go in the room. I've already uploaded it.
It didn't work in the early 2000s. Every other time in the last 35 years, it's been okay.
Did it at like 6 in the morning, bro. I've been up since like 4 a.m.
We over-anticipated the tightening cycle on the way down, and so I don't know where we are in that.
You're not in the Discord? Well, now you have a reason to go in the Discord. But I'm pretty sure you are, so. Yeah, I updated all of these ones today. All these squeeze plays, but there is, you know, there's 19. So if there's some other ones in here you want me to update, you just go in there and then ask me. Or if you want to get one added, I can look at it.
Only so much of the either Fed hawkishness or the economy is going to weaken. We've had a good run in economic surprises. It's actually looked better than anticipated. And now the question is, does that bring out more of the expectation? And nobody knows. And you mentioned the bank stability. It's a good thing. You know, look, 1995 and 1998 exist, which means Fed gets more dovish in response to financial stress,
guys.
And the markets and the economy are fine. They exist. They're in the history records. We can say that there's precedent for that. I don't know that you'd want to bet very heavily.
But we didn't have such an inflation problem then.
Either way, yes. We thought we were going to in 94.5, but we didn't. Right? Yeah.
As Diane was telling us a few moments ago.
Exactly.
Mike, thanks. Talking a bit, Mike Santoli, with the NASDAQ and the S&P closing out this very strong quarter led by technology. How do you position the portfolio on that front? Joining us this morning talking about what Q2 may bring, Satori Funds, Dan Niles. Dan, great to have you back. Let's talk overall how you've processed this sort of swing in sentiment, really even in just the last 3 weeks.
So we thought the market would bottom. We put out a tweet on March 10th and said, we're covering our shorts. And if you remember, that was the day that Silicon Valley Bank failed, because looking back, my general view was over the weekend, the government would do something to backstop this, because they'd gone through the Lehman crisis, they'd gone through Washington Mutual, and they would step in over the weekend. And so the market's gone from a low about 38.10 that following Monday. It's now rallied, obviously, about 250 points or so. And I had an interview with Mike Santoli that following Tuesday, March 14th. And I said, look, I think the market can get up to about 4,100 or until earnings start to get reported for the first quarter. And so we're kind of getting into that range. And JP Morgan kind of kicks off earnings season on, I think it's April 14th, if I remember correctly. And so I think that's sort of your sell-by date on this rally, because when the banks report, you're going to now go from, well, we're focused on financial instability to what are earnings, and earnings are going to have to get cut anywhere between 10 to 20% on bank EPS, just because you've had deposits rates go up a lot, which squeezes their net interest income margins. And Schwab yesterday is a good, maybe sample set of what could potentially happen, where you had Morgan Stanley, who's liked the stock for 7 years, downgrade the company and say, hey, net interest margins are going to get hit. They're going to go down by they cut their estimates by 30%. And you're like, well, the stock's already down 34% going into this. And it goes down 5% yesterday anyway. And last time I checked, it was down again today. So clearly it's not all in the numbers yet, as much as people desperately want to believe it is.
So Dan, have you missed this run that we've seen? S&P 500 up for the quarter 6%, NASDAQ comp up 16. Have you been too bearish?
No, because you may not have heard the answer to the prior question, Sarah, but I said on March 10th, you can look at the tweet, we're covering our shorts for a short-term bounce. And on the 14th, I said with Mike, we think he can get up to 4,100.
Right.
We're close. So we've done very well with this bounce. We've gone from 55% net short before the banking crisis to 5% net short on that following Monday on the 13th. And so we've gotten a good portion of this rally. We're up for the year. We're up last year. We're doing very well. Now we're just looking to add back those shorts. And we've started adding a few. We're back up to about 25% of the portfolio being short, but it's nowhere near the 55 we had going into this. So we feel pretty good.
So that was the part about you thinking the regulators would step in, as they did. So got that right. And so now, Dan, when it comes to adding to the short position and being worried about bank earnings and the risks out there in the system, what are you targeting? Are you targeting the banks? Are you targeting the big tech companies, which have kind of been going in the opposite direction?
Yeah, no, we like a lot of the big tech companies. Obviously, Meta's a name we've liked for a while. We were recommending Intel when people hated it. Obviously, the stock's now up over 20% for the year. So I think you have to go.
Oh, is Mara ready to come back to Planet? Yeah.
That's where we've started adding
or
back
not?
a majority of our shorts.
What do you think?
We've gone from having no shorts in the banking system in, I think it was like that following Monday on the 13th.
Yeah, I mean, like I said, I'm just writing covered calls on it at this point. I had the cash secured puts on it going into the split or earnings, which were profitable. And then I bought when it came down after the 3 white nights. I bought, which looked okay, and then it fell off. Like it just held. It went sideways, and then in the pre-market they started shorting it. So I bought at 13 here. Could have waited, I guess. Could have waited a little bit. Could have waited. I just thought coming into open it might rally, so I got in. Didn't rally, got shorted even further to 200 EMA. So now I'm just writing covered calls. It's fine because I haven't lost anything on it, so to speak. Like, what am I down on shares? I don't have even that many shares, so. Okay, I'm down. Says I'm down 89 bucks on shares. 8%. But it's not. I mean, I've earned on the covered call, I'll earn 20 cents a share, so. Like I said, it's fine. I'll just keep writing covered calls. It's got a $15 price target on it at this point. Most, anyone who had shares, they could have sold here in the Discord, no problem, because they're pretty aware of this pattern now. And this is fucked up. Just won't come down. It's crazy. Ooh, FRC's coming down now. Okay, that's good.
Big tech companies, IT spending in general, Financial services is the second biggest spender in that 4.4 trillion.
4% for the 10? Like, that's trash.
These banks are not focused on spending money. They're focused on surviving. And so I think a lot of these tech companies and enterprise,
For next week, what we got?
Well, that would be interesting.
But it's good. It's not very busy. I can probably bang this out quick. Earnings next week is pitiful. 54 plus 36 plus 35 plus 20 plus 1. 146. It went from 734 companies to 146? That's fuck all. Okay. Open earnings.
Back in, I think, November of last year, and Meta had guided to this horrific expense growth. And we were like, well, we like the stock. We're buying it here.
So, I mean, you could write, like, if you want just like a free 5 cents a share, you could write 12.50s on FRC for today. Like, for today. What are the odds that it goes down to 12.50? Pretty much none. Even 13. You're probably pretty safe. That's 7 cents. You know? That is, like, literally free money. I don't know how much money you're working with, but, you know, you write 10 contracts, that's $70. You know, it's just if you're looking for some free cash today, you want $100, you need $7 a contract. You know, you got to write 14 contracts, 14 at 7, for 5 cents, which is like $12.50. There's no bid. So 13, there's a bid. There was a bid a minute ago on 13, but it's gone, I guess. So $100 divided by 5 was just 25, right? You gotta write, or 20, sorry. You gotta write 20 contracts for like a free $100. It's like not much, and that's gonna require a lot of capital too, because 20 times 100 times $13, so you need 26G to make that $100. But free money, like literally free. So there's always like free money plays, which I don't know, like free money Fridays. You know, here is that bull flag that I'm talking about, though. So get ready to see these run up some more. Like Rumble, you can't even get it right now. It's like 2 cents. Not a lot of tickers you can get anything on, which is why I'm saying this is like, you know, it's there's what, less than 6 hours left. If you're really not looking for anything to do and you have money in the account, that's something to do. But unfortunately, that screws up your next week because this won't complete until Monday. So if you're trying to do anything for like next week, to get those free 2 days over the weekend, which is that's what I want to do here, but it's just come down so damn much. You can't do that because it won't complete until Monday morning, pre-market. Which, if you're selling the puts, you want the weekend money. Like, you want MCB. You want, well, I mean, MCB is monthly, I suppose, so it's just irrelevant. But, you know, Rumble. What's Rumble? Just to see. Like, I don't think they're very good for Rumble, though, to be honest. Like, they don't pay that much. They're a little bit risky, yeah. And, like, that's not, like, a $9 strike. You know, that's kind of your free money one. 20 cents on 9, that was nothing, right? It's 2.2%. So, you know, you'll be lucky that maybe that opens at 15 or 10 cents. That you can get 10 cents a share, which is fine, but not really worth the risk, in my opinion. You want to get into something that's more volatile so that, you know, if it loses 25%, say, come open, then you're good. What's Mara? Era for next week, right? See, that's not too bad. 37 cents on $8. Hey, that's 4.6%. Now there's a good chance it is $8 because it was $7.65. So this one is like basically risk free. This one you'd have to be looking all the way down to $7.50, which now it's not as good, right? 20 cents on 750, 2.6%. That's shit. I'm trying to find ones that are close to 8-9% every week. And it's right now it's actually not, it's few and far between. Sadly. And I don't have a good screener to tell me them either. My screener isn't, I don't really have an option screener.
When COVID hit my business, everything shut down. Revenue, phone calls, all business. The new cost of operating during COVID hit hard too.
It's interesting. These stocks are below the 52-week low. So these are at all-time lows. Let's go with volume and ones that are trading heavily.
If you have a business, you should go to getrefunds.com.
So these would be like recovery plays. Okay.
Their business, and we can help yours.
I'm just going to toss that in the market movers.
In just 8 minutes. GetRefunds.com, powered by Innovation Refunds.
There are many similarities between golf and running a small business. Like golf, running a small business has its challenges, but it can also be an opportunity to showcase your talents. And when it comes to business, UPS is here to meet the specific and ever-changing needs of small business owners. Next level e-commerce with UPS means you can get your products to your customers, no matter where they are,
pumping down.
so you can stay ahead of your competition. Our international shipping experience will help you expand your business as you transition from local to
Find a screener that's for IV on options, but a lot of them are trash. Like they're telling me to like get like a bbig $4 call, and it's like a 92-cent stock. Like it doesn't. The screeners don't even know what to look for. They don't know what I want, essentially. So like, because I've looked at a few, and none of them seem to be what I'm looking for. I'm just looking for just the puts and which ones are high IV. That's it. But I don't have an easy way to see that. Not that I'm aware of. So if someone knows that, let me know, because that'd be amazing. And 52-week high, actually, I should probably add that as well.
Before you deposit the money you're going to count on.
Senator Elizabeth Warren with us
Sent
this morning,
too.
calling for a raise of the FDIC insurance caps in the wake of the banking crisis.
So you'd look to reverse these to the downside. These ones.
Reiterating a buy on Schwab, saying that shares could rise as much as 50% over the next year. You'll remember Morgan Stanley said something similar yesterday, 23% upside despite moving to the sidelines on the name. It's been a volatile period, obviously, for the stock. Shares down 40% year to date in the shadow of the SVB collapse. Conflicting reports on whether
This one for, you know, 20. It just went up 23%, and it's above the 52-week.
100% of deposits should they have to, and of course your interview with him a couple of weeks ago on his at least personal stake in the company.
Right, he was buying back stock during the difficult period. Nonetheless, these concerns persist, even though he's gone to great lengths to come out and publicly say we've got the liquidity. 80% of our funds are
I'm not surprised VVGO warrants are on that. Canoe Health.
but they have
Hive blockchain? Oh my god, is that still a thing? Is that still a fucking thing? Hive blockchain? Holy crap.
which is basically moving money around.
So there's your bull flag, and then it moved up again. Which, yeah, it's just pennies, but I mean, it did move up. 66.67 to 67. It's almost up $1. That's how you, like, that's literally a bull flag. I'll just draw it. When they say flag, this is what they mean. It's like this, and it goes like this, right? And that's bullish. And if it's flipped, if it was like red candles and it did that, that's a bear flag, which signals more down. This one signals more up. Blockchain. Does it even have? Does it have?
Where that's going to stop and where it's coming from. So Friday we get the report from the Fed on deposits from small banks and large banks and how much is leaving the system overall, and that'll be indicative of how much concern there really should be here.
Yeah, all about deposit flows right now. When we come back this morning, global stocks outperforming the S&P over the last month and quarter. We're going to break down some of what's going on in Europe and on the heels of their inflation data this morning. Take a look at the Dow. Up on the day, still negative for the quarter, but having its best week since November. And we got S&P 4080 now. Don't go anywhere.
Now is the time for a Wings and Rings franchise. The sports restaurant and bar concept where everyone's a VIP with no franchise fee and no royalties for the first 6 months of operation. With new locations growing across the U.S. and around the world, now's the time. To learn more about our Wings and Rings Development Incentive Program, our new
So the stocks are active, but the fucking tickers. The tickers are active, but the options are not active. Yeah, these are all trash.
Regulated
sell my life insurance policy.
Norman and Nancy Dugan for Coventry Direct.
We were about to let Norman's policy lapse because premiums have
But
become
yeah, I mean,
expensive.
now it's up a full $1 on that bull flag signal.
We just don't need it anymore.
Then Nancy called Coventry.
They were so
Shit the
helpful,
bed.
answering all of our questions.
If you're over 65 and have $100,000 or more of life insurance, you may qualify.
After this past year, we're celebrating life. We've booked some long overdue travel, and we're able
Schwab
to
is
pay
coming.
for our
Schwab is
grandkids'
making a
college.
Coventry Direct has helped thousands live the life they want
Then
to live. Pay for unplanned
Dow
medical
Jones up a
expenses, or
percent.
supplement retirement income. When it comes to selling your life insurance,
Buy super trend has been up since yesterday before close. FRC has been up. It's up today. MCB is signaling down, but not actually moving down. It's full blown bull.
You can defer payments of a full NetSuite implementation.
So is Mira. Jesus Christ. And this is gonna pull Mira and Riot up with it. Make no mistake. So that bull flag signal, that was legit.
33,000 companies have already upgraded to NetSuite, gaining visibility and control over their financials, inventory, HR.
That's why I closed my short. That's why I closed right here.
Processes, boost efficiency, build forecasts, and increase productivity across every department. In fact, almost 90% of finance leaders agree that NetSuite helps them reduce manual data entry
That does
time.
need to cool, but they can cool it sideways, okay?
Hundreds of millions of dollars.
They can trade it sideways to cool it.
Financing offer of no payments or interest for 6 months at netsuite.com/news. That's netsuite.com/news. netsuite.com/news.
It's 16% annual, so I don't give a shit. I'll just hold the fucking put open. But it's already up to 8:30 now, right?
Indeed can help her hire great people fast. I need Indeed. Indeed you do. We instantly connect you with quality.
It's at 8:35 now because this was like 8:20. So if they just traded sideways, 13 and VWAP just keep moving up, which is going to make it even harder to close.
Welcome back. Global stocks have outperformed the S&P 500 to start this year.
What is Apple
But
up
this
doing
morning, Citigroup says that run is over, double upgrading U.S. equities while cutting Europe to neutral. Seema Modi here with more on the
Cent or so?
overseas, just as we
No, not even. Wow, okay, it's getting exhausted on the call side.
European financials faring a lot better than U.S. banks in the past month, despite news of Credit Suisse and Deutsche Bank, and that has allowed European stock indices to outperform most global markets, including the S&P 500 this quarter, up around 6%. The rally led by France and Germany, both with double-digit percentage point gains, due in part to reduced concerns around an energy shortage and optimism around a China recovery. A gauge used to measure activity in China's services sector hitting its highest level in more than a decade. That came out this morning. So that, along with the restructuring of two
So
big
fucking
Chinese tech
hilarious.
giants, Alibaba
They,
and JD
on one hand, they'll say like a China recovery. They act like it's good. And on the other hand, they act like China's your enemy. So which is it? If China's recovering, that means that's not good for you when another country is having an economic boom. That isn't good for USA. Like, they're your competition. They're not your fucking friends. So, I don't know. It's just funny to listen to the radio day in and day out, and the sentiment towards some of these, to China and to some of these other countries. Like, I wouldn't be surprised if later they go, oh, Russia's having an economic recovery. Oh, wow, this is great stuff. Like, after, like, shitting on them for fucking 2 straight years now? A year and a half of Ukraine? Like, I wouldn't be shocked.
What's the biggest event you're watching in March? And he says, it's not a state council meeting in China. It's not the elections in Latin America. It is First Republic earnings on April 13th. That will drive sentiment, not just here, but overseas.
Yeah, and then, of course, J.P. Morgan on the 14th. Still some discussion. I think it was Citi last night. It said, look, Tier 1 capital still better this cycle than it was in 2015 or 2008 because there have been so many hard lessons learned by the banks and, they would argue, policymakers too, Seema.
Yeah, it's a great point. Who learned what during the last financial crisis and who's better for it?
Seema Modi on the banks. It's going to be an eventful set of earnings in a couple of weeks. Let's get a news update this morning with Contessa Brewer. Hi, Contessa.
Good morning, Carl. And here's what we have for you this hour. The New York Police Department says it's seen no credible threats to the city after the indictment of former President Donald Trump. The NYPD has had mobilization plans prepared since last week in anticipation of potential criminal charges being filed against the former president. Trump is due to appear in court in Lower Manhattan Tuesday for arraignment in this case. The Justice Department has filed a lawsuit against Norfolk Southern over the railway company's train derailment in Ohio in early February. That lawsuit alleges Clean Water Act violations that allegedly occurred due to the derailment, which caused a fire and local evacuations. And the Vatican says Pope Francis is expected to be released tomorrow from the Rome hospital where he's being treated for bronchitis. The Vatican says the Pope will be in St. Peter's Square for Palm Sunday Mass.
I said, like, it didn't even matter.
Wishing him
It didn't even matter that they did that.
Sarah.
His stock actually went up on that? Like, you gotta be shitting me.
REITs and commercial real estate. Some are warning that they will be the next shoe to drop from higher rates amid the banking trouble. We're going to check in with two CEOs to get a full picture of the situation. REIT East Group Properties, focusing on office and warehouse environments, plus the CEO of JLL, the company one of the largest commercial real estate players in the U.S. Back after a quick break.
Hooray for Hollywood! Busted Open's going to Hollywood. Beginning today at 12 p.m. Eastern, join me, Dave LaGreca, and my Hall of Fame co-hosts,
JLL.
Sully Ray and Mark Henry,
Yeah.
as we talk to WWE superstars ahead of the biggest wrestling
Yeah.
event of the year, WrestleMania 39.
Could be heading still to 70 though. Bounce off of this 13 EMA. So if it rejects, it'll be heading down. If it pops, it'll be going to. I'll put that out. It is crossed to the upside though, so I think it actually could head up.
Martin Hoke, the inventor of Navage nasal
Put
care.
this up.
I love Navage. I've told you about how your nose is the body's air filter. That Navage's powered suction will help flush
That
out
is signaling a
allergens,
trend
viruses,
up.
mucus, and germs. And that
And that's
Navage will help you
oversold,
breathe
but
better. But what do other people
that's
say about
key
Navage? Like
resistance.
Navage is the best thing I bought. I love it.
Give me
My
one
nose
sec
feels
here,
so
guys.
clear now and I can breathe. I've been struggling with a stuffy nose for weeks. I bought Navage and it's amazing. Or this one. I use Navage every night, could not imagine life without it. I have 5 cats, and before I found Navage, I was a clogged mess. Now I breathe so much better. Unquote. Those are 2 of over 100,000 online reviews praising Navage, the all-natural solution trusted by over 3 million people to help you breathe better, sleep deeper, snore less, and stay healthier without drugs. Navage is available at Walmart, CVS, Walgreens, Target, Rite Aid, and online. Navage, N-A-V-A-G-E, clean nose, healthy life.
Finding great people to hire is like trying to find a needle in a haystack. It's pretty difficult, right? Well, ZipRecruiter has mastered finding a needle in a haystack, so they take it to the next level. They make hiring so simple that it's like finding a needle in a needle stack. And that's why you should try ZipRecruiter for free at ziprecruiter.com/news. Here's what it's like to use ZipRecruiter. They have so many qualified candidates that it's easier to find the right ones for your roles. In fact, 4 out of 5 employers who post on ZipRecruiter get a quality candidate within the first day. That's a lot of needles. So how do they do it? ZipRecruiter's powerful technology sends you candidates who are a great match for your job, and you can even invite your top choices to apply. So if you want less hay and more needles, head to ZipRecruiter.
And right now, you can try ZipRecruiter for free. That's right.
External Alliance.
ZipRecruiter.com/news. That's
So much.
ZipRecruiter.com/NEWS. ZipRecruiter.com/news. ZipRecruiter, the smartest way to hire.
It's getting options activity. This is the key thing for me.
From this month's bank failures has been, what is the read-through for commercial real estate? Our next guest runs an industrial REIT, nearly 500 properties across the Sun Belt. He thinks the turbulence we've seen could actually be net positive for the space. Joining us now is East Group Property CEO Marshall Loeb. It's great to have you on the show. Marshall, how can it be positive when everybody's worried about tighter lending standards, all these loans coming due with higher interest rates? What's positive?
Well, thank you for having me. Flattered to be here this morning. I'll preface it with I'm an optimist. But where I think it's positive, as we step back from it, and there's about a little over 160 REITs, and per the REIT Association, there's 13 different sectors. So, in industrial, it's positive, and my description, a few thoughts. One, as we are heading into this downturn, we're a little over 98% leased, are the numbers we put out at the end of February, and we're roughly call it in that same zip code as we wind up first quarter. And I think the banking, that you'll see a tightening in lending standards. You've read about that, so that's already in effect. The banks are already moving that way. And then the second thing, that's today, and then tomorrow I'm expecting, I would imagine there'll be even more banking regulations. So as the REITs, usually it's the larger companies. The average REIT's about 1/3 leveraged as the terms of their market capitalization. We're probably a little under 20% as we sit here today, and with a number of banks in our line, 11 different banks. So I think at 98% leased, and you start to constrict supply, that's what's going to lead to the demand in industrial has been very strong the last several years. And when you start to constrict supply, we get pretty excited coming through this as we look ahead to 2024, the back half of 2023.
So is access to capital, to loans, a problem or not?
I think it has been. Really, we started seeing it kind of mid last year. There's a lot, and again, I'm speaking on industrial, and a lot of days I'll say I'll miss the forest for the tree. But access to capital really started to change as interest rates rose last year. And I think with the banking crisis, look, it's human nature. I think people are the consumer sentiment will be a little bit lower, and I think banks will be tighter with their credit. So you've already seen a drop in starts really for our product type in the back half of the year, and I think that will accelerate. And then there's other sectors within, broadly speaking, REITs, office and retail, hotels, things like that, where the construction starts will hit. And that's where we get excited. If you said, what's the flaw in my theory or my hope, is we have about 1,600 tenants within our company. I hope the access to capital doesn't hit them hard. Our debt's pretty well laddered. We don't have many near-term maturities, so we can manage through that, and we'll be opportunistic. The other benefit, we see it, there's pros and cons of being public, but access to public equity and public debt. So we're not just reliant on banks. We can go to life companies, and the largest of the REITs will issue public debt. So there is that access. We had raised equity through February right at $90 million, and we'll continue to be opportunistic in terms of issuing equity through the balance of the year. And I think with that, well, I'm sorry, go ahead, Sarah.
No, I was just a little more color. So how many banks do you have lines of credit with?
We have, it's one line, thankfully, so it's not as common. But we work with 11 banks, and so, probably as we're adding up the other day, and it's something we talk about. Which banks do we work with in our line? It's one line. We just expanded it at the end of the year. Thankfully, I'll credit our finance team. Our balance on it is pretty minimal, but we raised that by another $200 million, and it's 11 banks.
If I had to buy on these fucking stocks, which I don't, because I don't have any faith in crypto at all. Fucking none. Holy shit. I'm sitting here looking for 8% a week, guys, for 52 weeks. 8.6%. Lord, please. I'm not even being greedy here. That's a week. That's not even in a day. Like, I don't even care. 8.6% a week. Come on, Lord. Give it to me.
And then eventually, I guess it could shrink the size of our line, but with a balance that's pretty minimal, and for us, of $675 million in availability. Today, I like that, and I'm not wishing ill on any of our peers, but so many of our development peers are local, regional companies. We'll build the smaller, shallow bay, last mile product, a lot of people call it. With that supply going down, and some people with...
Oh, since it's in what I call no man's land, which I'm explaining in my Discord, which you're obviously, probably all of you guys are Discord, because I don't think I'm getting anyone new. I don't see any new people talking, let's put it that way. You probably don't know if this channel exists. If I went on free from it all, we'd probably have 70 people in here. For whatever reason, I can't get pushed with this new channel. I need my fucking people to hit subscribe. I need people in the Discord to subscribe. I'm still under 200. There's 400 members in the Discord. I'm under 200 subs on this channel. I don't know what the fuck's going on. But, it's in no man's land. So there's no ceiling right now. The ceiling is just going to be psychological level. Is what I'm trying to say. There's and then every one of these is support. So it has if and when it will fall, which it will, because it's not going to just maintain 81 RSI the whole fucking day. That's not going to happen. When it falls, it'll come back to these levels. So this is why I'm still holding my short on Mara, which is trading sideways. But as you can see with the sideways, they've taken it from 85 RSI to 80 with completely sideways trading, which is not where I want to be as a short holder. Don't want to be in that.
Return to office is a structural step down in the need for office space.
Well, what we have already seen over the last couple of weeks, that people are returning to office. So occupancy in offices are growing all across the world and also across the US. And we shouldn't dismiss office buildings overall. It is the place for meeting and working and engaging with your company. And so I'm pretty sure that offices have a big role to play going forward.
You know, it's funny, the information, a news service has a story today about Meta, for example, where they reportedly have brought in a DJ to convince employees to come back to the office. I mean, you're not seriously expecting 5 days to become the standard anymore, are you?
No, definitely not. We would expect that the standard will be probably going around 3 to 4 days a week, depending a little bit what industry you are in and what role you're playing within your company. But around that 3.5 days will probably be the average in the US going forward.
So aren't we looking at a situation now where in 12 to 24 months, a company can say, we've got 2/3 of our people back on any given day. We can afford to let go of a third of the space in our urban centers. What makes that unreasonable to think?
Well, first of all, companies have to decide whether they have assigned seating or unassigned seating. If you have assigned seating, it doesn't make a difference whether your people come every other week or whether they come 5 days a week. You have a seat for that person. So companies first have to move to unassigned seating to reduce the space for work desks. But then usually what we see when they reduce the space for work desks, they're increasing the space for meeting, for engaging, for innovation, for well-being. And so it's not necessarily the case that they're all downsizing the space they're using. Most of them are actually upgrading the space they're using. They're trying to move into better buildings. So it's not necessarily the DJ, it's better space.
Yes. We were just talking about the relationship with banks, and there is this thesis that corporates are going to diversify their deposits. I wonder if you think that theory is overdone, given sort of the friction in establishing new lines of credit, establishing new relationships with additional bankers. Do you think people are overthinking it?
Well, listen, the situation of SBB was very unique because they had in their business model that startups had to bank with them, and in most cases had to bank only with them. The majority of corporates do have different banking relationships and not only one banking relationship. And if they feel that their banking relationships may not be strong enough, or the
so it's already added. So it's at 13 EMA. I mean, I could close here and just walk away. It's the fucking RSI on the 5 is done. Yeah, I think I will.
For example, on the sell side, Deutsche's got a report out today, and part of their argument is,
yeah, because it's on the 5, it's RSI's reset. On the 15, not so much. On the 15, it could go to VWAP, but I don't really care. What did I? Oh, actually, that was stupid. I actually lost $8 on that. I forgot about my fees. But I didn't lose $8. Sorry, I lost $2.80. Forgetting about my fees, but I'm not about to compete with the bulls here. When I switch it to the 5, it looks ready to potentially hold, because it's on the 5. It's actually on VWAP as which would be 833, which is what I had it set at. Yeah, man, FUBU. I was the same, man. FUBU. I had a blue FUBU jacket that I loved back in the day, like way back. And it was that Rhino sweater. What the hell was that? Echo. So it was FUBU and Echo, and like the big cargo pants with the but they were sweatpants and shit. I don't know what the fuck I was wearing back then. Total idiot. Totally dressing not like that. That was not white guy clothing. Definitely. If you know what I'm saying. That'd be like me walking around with my pants around my ass right now. I can't believe they fucking do that. They look so retarded. They look retarded when they walk around with their fucking underwear hanging out. I think they should be in public. You should be allowed to hit them with a switch if you see that. Just anyone in public, you get to beat them if they have their fucking pants dangling like retards. Like who decided that was good? In prison, that means you're ready to take it in the ass, so you don't get beat. You do that in prison. Don't beat my ass. I'll let you fuck me in the ass. And then they've turned it into some kind of street style where it's like popular. Like, are you gay? Ultra gay or what? I don't understand. Which is fine if you're gay, but you could probably just wear like Pride or hang out at gay clubs rather than look like a moron. Because even the gay people aren't doing that. So, nothing against gays, but why the fuck you wearing your pants around your fucking ankles? Walking around the streets with your pants at your ankles. I don't get it. Might as well walk around with a big dildo up your ass while you're at it. For style, you know? For us, by us. Okay. Interesting. Does ECHO stand for anything? ECKL? I mean, I'm seeing a lot of stuff coming back. I think what they do with most clothes when they, when the sales are done, is they just put it in a fucking storage container, dude. Because I'm seeing clothing that I swear to God I saw 10 years ago, 15 years, 20 years ago. Like shit I owned coming back. There's no way they remade it. Like this must have been stored or something like that. Because they always recycle fashions, man. Yeah. He's a famous graffiti artist. Okay, cool. Yeah, hey, I mean, I own the clothing. Loved it. Loved that Echo sweatshirt, man. I still had it. I might even still own it, okay? I'm not even joking. It lasted the test of time, man. It's lasted like 25 years. It's comfortable as hell. And you can't say that about just any old sweatshirt. A lot of the times the fabric is shitty, or it's like very staticky. This thing is like heavy cotton. I don't know what the hell it's cotton. It's not a bunch of fucking bogus fibers. Heavy cotton. It's lost some of its color, obviously, right? But fucking just a good, comfortable ass hoodie. I used to wear it to work all the time. I think my next favorite hoodie was just a shitty Walmart hoodie, plain black. All right, we got it.
But it can also be an opportunity to showcase your talents. And when it comes to business, UPS is here to meet the specific and ever-changing needs of small business owners. Next level e-commerce with UPS means you can get your products to your customers, no matter where they are, so you can stay ahead of your competition. Our international shipping experience will help you expand your business as you transition from local to global. Our 1-2 combo of e-commerce solutions and friction-free international shipping will take your business to the top of the leaderboard. UPS, international partner of the Masters, and proud to caddy for your small business. Be unstoppable.
Now is the time for a Wings and Rings franchise. The sports restaurant and bar concept where everyone's a VIP with no franchise fee and no royalties for the first 6 months of operation. With new locations growing across the U.S. and around the world, now's the time. To learn more about our Wings and Rings Development Incentive Program, our new prototype restaurant design, and more, please visit ownwingsandrings.com. That's ownwingsandrings.com.
This is not an offer to sell a franchise. Franchise offerings are made through the franchise disclosure document. Ask for details.
Regulated activities performed by a licensed affiliate.
So far, seems to be holding. I closed the mirror a bit early. It literally went to what I said. 8:35 is what I wanted. to close it at, and it touched that. It's at 8:35, so it went exactly where I fucking had it. I don't know why I got antsy at. I don't know why I got antsy at 8:41. I would say it was that 5-minute chart. I guess I should have just stuck with the 15-minute chart. And either way, it would have been like no gain. Would have been like fucking $10. So I don't really care.
Coventry Direct has helped thousands live the life they want to live. Pay for unplanned medical expenses. Where
I said VWAP would be the first support, and then I mean it's so close to 13 EMA, it's irrelevant.
Or visit CoventryDirect.com to learn more about how you can get cash by selling your life insurance. 800-394-5272.
Getting a news alert out of Treasury on Medicare and Social Security. Kayla Tauscher's got that. Hi, Kayla.
Hi, Carl. Treasury is releasing its annual report on the financial outlook for critical Medicare and Social Security trust funds, which Treasury says continue to face what it calls significant financing issues. The Hospital Insurance Trust Fund, which represents Medicare, can only pay 100% of its funds through 2031. That's 3 years later than last estimated, but it's less than a decade from now. That longer time frame, though, is attributed to lower use of healthcare programs, lower morbidity for survivors post-pandemic, and lower overall spending in the programs thanks to the nature of joint replacement programs shifting from inpatient procedures to outpatient procedures. Now, the Old Age and Survivors Fund, which disperses monthly retirement benefits, is funded through 2033. That expires 1 year sooner than previously expected. Officials say the projections are changing because of baby boomers retiring at a faster rate than the economy is adding new workers, and higher wage jobs seeing pay increases beyond that cap more quickly than lower wage jobs seeing an increase in pay within the cap. Officials say in the last year, Medicare took in $989 billion and spent $905 billion, and they said legislative changes are needed to preserve these programs for future generations. Carl and Sarah?
Yeah, maybe even higher retirement ages, a la France. Kayla, thank you. Kayla Tauscher. Shifting gears, wanted to highlight beauty. It's been a major bright spot this year in the market. Ulta and e.l.f., all-time highs, while Coty is at its highest level in more than 2 years. Other retailers like Target and Dollar General looking to ride that momentum.
He's still holding VWAP in 13.
Has that story. It really has been such a bright spot. It's almost like
Going right back up off VWAP. If you go on the 5, that's probably the 13, right? Yeah, sorry, VWAP still. So it's still, the VWAP is what is holding them up today. I mean, the day is, we got 3 hours left, so something big gonna have to happen really for the market to really change its current trajectory, I think. I don't really see what would cause that. I'm just gonna work. I'm actually gonna try to.
On all this optimism and why beauty is succeeding where other segments aren't.
I can see the 14. See if I can't squeeze out like 16% on these fucking things. I doubt it. Yeah, 153 on 12. Not even close. Ah, that's too bad. 9 strikes. All strikes. 11.
It's worth noting that other retailers are following this trend too. Target's opening mini Ulta beauty shops in select locations, and Kohl's is adding Sephora shops in all of its stores. Back to you, Sarah.
It was a great interview, Melissa. Thank you very much. Melissa Repko.
Thank you.
It is amazing that these stocks continue to make new highs, even on down days in the market.
You got that right. So much activity out there this week regarding retail. Fascinating stuff. Still ahead, another Chinese e-commerce company splitting up. We'll get details next.
Just yesterday, this 12 was paying $1.18. Sorry, $1.08. $1.08 yesterday. Fuck. 55 cents. This was paying 80 cents on 11 yesterday.
Comedy Central Radio brings you the biggest names in comedy. All day long, you'll hear the best stand-up comedy from Comedy Central's massive library.
It was 90, but I wanted 95 on 11. I wanted 95, and it was 90 yesterday before close. which was still 8%, which is pretty damn good. Now it's fucking way lower on the 11. Brutal. Sorry, on the 1150. And it's crossed to the downside here if you look for FRC.
Many companies have some. And this is how many Search Kings has. Search Kings has over 1,200 5-star Google reviews. No wonder Google hand-selected Search Kings as a Google Premier Partner. You want to stand out where your customers are online? Switch to Search Kings.
Let's face it, talking about life insurance is never easy. But after we watched a close friend lose her husband with no insurance, we
time, but I will put it up. Here is the Discord link.
But then we heard about Ethos Life Insurance. They're a new kind of life insurance, built for people on a busy schedule who don't have time for unnecessary doctor's visits, fine
It's tomorrow morning, so if you don't sign up, you don't get in the class. 3 spots left.
I never imagined a life insurance could be so affordable
and accessible.
The peace of mind knowing that our future is secure, it just removes a lot of the fear around getting older and
the unexpected.
It's happening either way, and I think this Mike guy hasn't been responding, so it might only be 6 of us. He paid for it, but he skipped like 3 weeks, so I don't know what the fuck he's doing. But
Invita's Precision Second Opinion is disrupting the world of late-stage cancer in a positive way. Sandy, Archie, and Jan all had something in common. Late-stage colon, prostate, and breast cancers that didn't have targeted treatment options. Invita's precision technology has given them their lives back. I'm Dr. Dino Prado, and I personally welcome you to utilize our Precision Second Opinion and discover if Invita is right for you. Visit us at invita.com.
So 15 cents. 15 cents a share. Not a big position by any means, but I actually took a $2 loss, so $3. What are you gonna do? Coin was pretty, now coin is almost looking double toppy. But as long as they still hold this and crypto is still 28.5, I mean, who knows? Coin will move off of the crypto, right? America. Different.
Independently run companies that could seek separate IPOs. Between those two JD.com subsidiaries that have filed, and potentially Alibaba's logistics unit, which is reportedly in talks with bankers, China's IPO window may reopen soon, and before even ours has. And there could be plenty more opportunities if this is indeed the new playbook. You've got Tencent, many different businesses, Baidu, Meituan, ByteDance, all of those have several different businesses under that one umbrella.
People just scalping the shit out of it. What a joke.
Has been key, like it has been for our own big tech companies. Important to keep in mind, though, when it comes to the Chinese ones, this is really full circle from Ant Group's botched IPO in 2020. Remember, that was set to be the world's largest debut. Then Beijing pulled the plug and kicked off years of regulatory attacks and value destruction. So even though we could see billions of dollars reaccrue to these Chinese tech companies, the landscape has fundamentally changed here. By breaking them up, China has also diminished their influence. Fix the whole idea that CEOs like Jack Ma are too powerful. So by breaking up Alibaba, he is seen as neutralized. And investors can't forget that over the last few years, Beijing has taken these so-called golden shares in private companies like Alibaba, Tencent, and ByteDance. It's unclear what happens to those shares if we see more spin-offs. But if they remain, they do give the Communist Party entities outsized power to influence or even to veto some decisions. And guys, while the crackdown on China's own tech giants may be easing, we've been talking about this for a while, Micron today could be an indication that attention is now shifting to American companies, that we're finally seeing some of that retaliation.
Absolutely. Deirdre, I was going to ask why they're doing this. Is it for some strategic reason, or is it, as you say, a power move by the Chinese regulators to take away the power of some of these huge conglomerates?
Why? Probably simply just because it can. I mean, there's always been questions. What could the Chinese government go after? Especially when we're talking about the whole Huawei debacle. Would they go after something as big as an Apple? But you can't go over an Apple because the Chinese love their iPhones. That would be disruptive. You have a Micron. I mean, it's not a household name in China. It
it's the nuts and bolts, so they can more easily do so in a way that maybe you couldn't even go after Starbucks or Nike.
So that's probably about 100%. Oh my god, 240%. So no one's expecting that. clearly, you get a 0.8. You get like a 1.5% move. You should see SPY up a couple 100% normally. So to get the same returns here, that's to me, it's a surprise.
They need to be friendly, or even a Dutch company, because they need some of that equipment. So where they think they have the upper hand, you might see more pressure. All right, Deirdre, thank you. Deirdre Bosa. Straight ahead, Wall Street's buzzing about deal making this year, or really lack thereof. That story is next.
Is your car still under warranty?
No, not anymore.
My mechanic just suggested an extended service plan from Ox Car Care.
Ox Car Care?
Yep, Ox will cover your car repair bills if anything happens to the car. New brakes, a transmission, AC or engine problems. Plus, Ox Car Care offers free oil changes, tire rotation, and roadside assistance.
Wait, you pay nothing on the repairs? Ox just gets it fixed? Free oil changes, free tire rotation, and free roadside assistance? What's the number?
Yep, you don't pay, Ox pays. Ox even has a 30-day money-back guarantee and is A+ rated on the Better Business Bureau. They handle their claims from start to finish, unlike the other warranty companies. Here's the number, 800-695-2073.
That's my best guess. Which means you would take out puts here and ride them down. I don't think it just goes up for the rest of the day. They always do that shit.
Ask about senior and military discounts. Don't get stuck with a major car repair bill. Call Ox Car Care today. 800-695-2073.
You want your business to succeed, but need working capital to get things moving. The financial assistance your business needs is waiting for you at Everest Business Funding, your #1 trusted source for all your business funding needs. Just go to myeverestfunding.com or call 844-FINANCE. You'll see just how easy it can be to get funding. Everest Business Funding helps business owners get the fast working capital they need with a hassle-free application and no hard credit checks. Everest has the best deals for your business needs and fast funding, usually the same day. Everest goes above and beyond traditional funding providers because they want your business to succeed as much as you do. Grow your business with Everest Business Funding, helping business owners get ahead with fast working capital. Learn more at myeverestfunding.com or call 844-FINANCE. That's myeverestfunding.com or call 844-FINANCE.
Listen, ladies, I know a lot of you are probably either going through a divorce or are divorced, and you're holding on to that ring. Why are you holding on to that ring? It's got bad energy attached to it. You have to head to worthy.com. Worthy is a selling partner that you can trust to get you the most money possible for your jewelry, risk-free. 45,000 people have already sold their jewelry with Worthy, and now for a limited time, you'll get an extra $100 when your jewelry sells for over $1,500. All you have to do is register at worthy.com/radio. That's worthy.com/RADIO.
From opening day to the postseason and through the Hot Stove League, the place to follow baseball all year long is MLB Network Radio Channel 89 and on the SXM app, included with all of our trials and popular plans.
This is Sirius XM. Sirius XM. Radio.
Something Wall Street's buzzing about this morning, global deal making slumping to a 10-year low. New data showing the volume of mergers and acquisitions, look at this, plunging 48% in Q1. The number of deals also at the lowest level in the last 10 years. Recent banking turmoil, rising interest rates, recession fears, just some of the factors to blame for softening deal activity. It does stand in stark contrast, Carl, to the action in the markets, where the S&P is going to end up sharply higher for the quarter, and so is the NASDAQ, but there is a lack of confidence, I think, what's happened with banks, tighter financing conditions as well for deals. We're watching the private equity because they've been getting a little busy off the sidelines lately.
We'll be looking for commentary on that front when we get the earnings from the big investment banks anyway, and get a sense of what expense per head count is doing. And we already know what's happened to bonuses. Down double digits easily.
Right, and the stabilization generally in banks. Tom Lee, of course, very bullish, always says, you don't get two back-to-back quarters of gains.
Selling fucking $90 pillows that you can find at Walmart for like $5-10. And do the math.
100, which for a lot of people was a target in the near term on the S&P. Holiday shortened week next week. Let's get to the judge.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. The quarter ahead for stocks is earnings, the Fed, more economic data loom, especially large, not to mention any potential surprises, of course. The Investment Committee revealing their playbooks for the months ahead. Joining me for the hour today, Carrie Firestone, Steve Weiss, Jason Snipe, and Jim Leventhal, both here. With me at Post 9, let's check the markets on this final day of the quarter. You just heard Carl say the S&P is looking for 4,100. Will it find it today on this final trading day of the first quarter? We shall see. NASDAQ, big shock, outperformer yet again. It's up better than 1%. All right, Jim Leventhal.
It's up 16%. Oh, my God. Oh, God. Here we go. This is going to be fucking huge. Oh, my God. Jesus Christ. Let's put a stop to AI. And then what does AI do? Runs.
That same year. Got a little seasonality on
I guess that was the miss of the day.
What do we think? And a week in which you've gotten a little more negative.
I would say it's the miss of the week because, you know, Intel was 2,600%.
What I've really got to respect is that the Fed just doesn't seem to get it. And I'm not going to belabor this point, but yesterday you and I were on, and Fed President, I think it's Boston Collins, talking
CCL.
about more, and I'm flabbergasted. So I'm not even going to spend time on that.
Does that mean does that make you more negative about what lies ahead?
Yeah. Because first off, what they're doing is they're snatching defeat from the jaws of victory, Scott. They've got inflation going in the direction that they want it. I don't care if you look at average hourly earnings, the labor report, the CPI, the PCE today.
Maybe I should pull that up.
Going in the direction that it's going to go. And
CCL, that's fine. It's just sitting. So, you know, where could we short this to? 1 year, 1 day? Holy fuck. Jesus. Okay. Well, it broke out of its triple top. Can't see that continues, though.
Missteps by the Fed. Is the Fed moving too fast on rates, we asked? Yes. 45% said yes, time to slow down. So we got worries that the Fed is going to make a mistake. They're going to misstep. And that is going to cap what happens in stocks in the months ahead.
Well, there's no doubt about that, Scott. Obviously, they went too far on the front end, right? They talked a lot, all the transitory language that we experience, and it's likely that they will over-tighten. But I'll tell you what,
if I can get some,
as it relates to PC,
because I think you could get it right back at around 29, 30 bucks.
And those numbers were positive.
So I'm gonna short this actually. Fucking risk review. Fuck. These bastards, they never have fucking shares for any decent company. God damn it. Fuckers. Any decent spike I want to short. I can short this for pennies, but I can't short that fucking juicy, massive... God, you fucks. As if no one has AI shares on fucking Questrade. Give me a break.
It's all about the
Give me a break.
And the market is very event-driven. Event meaning economic.
Alright, tried 50 shares. They wouldn't even give me 100. They won't even give me 50. Cheap bastards. Oh, sons of bitches. Sons of bitches. I just want to play the swing. That's it. And they won't even give me shares. Like 50 shares ain't even worth it. Gotta go down $2 to make $100. Now I'm just seeing, like, do you have any fucking shares? Yeah, they don't have any shares. Fuck off. 25 shares. Do you have 25 fucking shares? No? Wow.
So it is a big day. So it was binary. I said it'll be binary.
That's what that bling 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 sound is that you're hearing. It's the fucking declining.
You would have seen a big flush in the market. If it showed really muted, a non-event as we saw it today, or showed a significant reduction in the pace of inflation.
Do I even want to do it?
But it continues to be consistent, the market, in that it's just finding that sliver of good news to continue to push the averages higher. And I think that's going to be the case.
It's pretty priced in. 31, 225. Like, how does it move? Is it even moving? 225. It's not even moving, and the stock is just falling 20 cents. Stock fell 20 cents, not even fucking moving. So that means even the puts are risky. How the hell am I going to close it out if it ain't going to move?
Do you fall into that camp? Or are you in the city camp, which says, you know what, it's time to upgrade U.S. equities?
Well, Scott, you know that at one point on the show I sent
This one
you a
moved.
text that said the most positive thing about the market is how negative
How's this
everyone
not?
is. And now, 3 months into the year, we have the NASDAQ up, mid-teens. You've got technology stocks and communication stocks up, high teens. I mean, who would have expected that among the camp that said we had to get to new lows again?
10 cents.
What we've seen,
One
though,
10
is
cents.
the effect of all of the interest rates that we've had are behind us, and now maybe we have 25 basis points left, but at that point, it's unlikely that we're going to see more. And markets start to appreciate risk when they see that interest rates may have peaked or about to peak. The
Still technically trending up because of, what you call it. This was all today? Oh, this is, sorry. Let me go back here. It is all today, pretty much. Jesus.
And there has been, and the market has handled this banking crisis in a way that I think is unexpected, for many people.
I think you're right. I think you're right about that. But let me just jump in for a moment too, because people are trying to wrap their arms around the idea that technology's run so much. Can it really keep going?
Fun. It's got
not necessarily at the magnitude in which it's run, but nonetheless, can it keep going at all? Another question we asked as part of this survey, Jim, the best returns for the remainder of 23 will be, now, NASDAQ 100 got 23%, but look at the top.
Let's be real
33%,
here.
a third, think 2-year treasuries. Yes. So it speaks to where Kerry says sentiment still remains, right?
So it's a fabulous point. And what I would want to say is we look at Q2 and the rest of the year versus Q1.
Scalp though, don't get me wrong. I'm not gonna try to like short it indefinitely, but I'll scalp that. Or try anyways.
People are giving it credit for. 3.2% is the latest GDP
Where the hell is it?
update. That's going to be updated today, probably on our show. It's likely to go higher on the back of what PCE spending did today. But even that is not actually capturing everything, because for some reason GDP now, Scott, doesn't encapsulate the services portion of the ISM.
On this fucking thing. So even selling these could be profitable. What is like 8 all strikes go to say 20, 24? 24. 24. Maybe this is the play. Sell some 24s on this bad boy or something?
It's amazing.
Yeah. Why shouldn't they keep going?
Well, here's why. Here's why. I get where you're going. So this has bothered me a lot for the last year. People saying, well, the Fed wants to crush the economy. The Fed wants to crush jobs. No, it doesn't. All right, this makes my head want to literally explode, but I won't do it on air. Okay?
20 cents?
What the Fed wants is maximum employment and lowering inflation, and they're getting lowering inflation. Look at the month-over-month figures. I don't care whether it's the PCE today, CPI.
6 man, that's trash.
Going this way, and that's before, as Jason pointed out, before this inevitable credit contraction, which on the margins is negative, but is negative for an economy that's just going gangbusters. The Fed wants this. I don't understand this talk of they want to crush jobs. It's nonsensical. It's nonsensical.
No, but they're if you say they're getting what they want, they're getting a credit contraction, but not a blow up. Knock on plexiglass or whatever this thing is. How about that? Again, it's yet another thing that they can say. It's like, look, we're not. We
mention this all day.
We can fight inflation. We can.
It's fucking crazy, guys.
From completely blowing.
Where you at?
If there are little flare-ups, we have the tools in the box to fight it too.
Like, are you gonna reset at all? Are you fucking kidding me? We got a one. Got a one. Got an over $1 gap in no man's land. Over $1.
Inflation coming down. I mean, the Fed, if you're listening to me, what more do you want? Stop.
Jason Snipe, this idea that the Fed's moving too fast, it keeps Jim from, who's about as bullish as they come on this particular show, from being overly positive because he worries about the Fed. Points to all the
this guy's literally complaining to the Fed while the market is literally pumping. Like, they want the market to not pump, you dumb fuck. they've been pretty clear about it, that all this pumping and spending isn't what they want. So you fucking half retarded or what? Because the market keeps pumping, SPY goes up fucking 6, 10, 20 bucks. They're gonna keep hitting you with rate hikes because they need people to understand that they aren't bullish. They're fucking trying to bring it down, not up, buddy. So you might want to do everybody a favor and start shorting, bro.
As Steve mentioned earlier, there's not a lot going on, and from now until May, there will be more data from a macro perspective, and I think the Fed will appropriately respond to it.
So I want to go back to Weiss because, you know, all jokes aside, Weiss, you confound me. I just don't understand how you are overwhelmingly negative, okay? And you let us and our viewers know that every time you're on. Yet, you bought Meta this week. You added more yesterday. You bought the Qs last night. You added more this morning. But yet, you always say that you don't want to buy these mega cap tech stocks because you think, in your words, I can get them cheaper. Can you help me understand this?
Sure. Absolutely. I'm here to preserve capital. I'm here to make money when I can make money. So I tend to be active. These are great trading markets. Meta specifically, it's trading at about 19 times, which is a very slight premium to the market. It's got great momentum. And if you look at it on the down days we've had recently in the market, the risk, the volatility is pretty low relative to the others. So it's a way to get long the market, I think, in a risk-controlled way. In terms of the Qs, it wasn't a big bet. It was a bet that we'd see inflation coming down somewhat, but I didn't expect it aggressively. I'm still sitting in a ton of cash, but I didn't want to be in the sidelines because, again, if there was the slightest hint, as we saw, that inflation was coming down, you'd see the market take off. That's what happened. I could have been wrong, Scott. I could have been wrong. And this morning, you had a very muted reaction to it. So I put on more of the exposure in the Qs this morning than I did last night because I thought the market, again, is going to glom onto these positive signals. But overall, I think it's inescapable. You know, so many bulls come out and they focus on the end
Trading
rates as
financial results from Micron, a dip in the 10-year treasury. That's not like there's no company specific news on AI.
Consistency in that analysis. What I'm pointing to is the future that is going to be the impact of the Fed action, and that's what's going to hit the market. And I believe, and I'm not wavering.
3% CTP. 3. So shorts are loving this. But I can't short it, so I don't know how you know. I guess you got to be. I guess you got to be fucking.
I mean, Meta is one of the best performing stocks of the first quarter.
Right, but it's where it is today. It's not where it came from. And today it's at 19 times. It's not 150 times. Hey, if I bought NVIDIA, I'd understand your consummation there. But I didn't. I didn't buy a stock that's trading at 100 times earnings. I bought one that's trading at basically a market.
This was the crash.
That's good, got good momentum, and you know, I think we'll do
this is like the healthy pullback, and then this is the shorting it. I wouldn't call that crashing though. It's green on the day, so
it's valuation and support under it. If I'm wrong, and I don't like the metaverse play that they had. They're cutting back on it, so that's attractive as well.
So, Kerry, what about tech? I mean, I know you own Meta, and we don't need to have a conversation about that, and I really don't want to specifically about Meta, but overall, this notion that, all right, tech's run a lot, it's going to continue to run, right? What you thought was going to happen this year is not happening thus far. So, can't beat them, join them. Just continue to buy big cap tech. Is that the right play?
Well, so just to be clear, what we thought would happen this year has happened. So tech stocks were, destroyed. And despite the group was down 30%, many stocks were down 50 to 80%, including some of the big ones. So they underperformed. They got some religion. They started to address efficiencies, cost cutting, how to make their business better and leaner, because for years they didn't have to. They could show very good numbers and they could spend whatever they wanted to do. So now they're not spending as much. Their stocks, then their options are underwater. and they're taking action. So that's a positive.
Sideways. It is below. It's below VWAP, so hopefully it comes back up and over VWAP and over 13, but never know. This is fucked up. No company-specific news. Should see one red bar. It has 0 red bars for the entire day. So if I can't short it at the very top, I don't know. If you can't profitably short after 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 green bars, I guess I don't know what the fuck I'm doing. Right? It's like if you could have found shares, you're profitable already. The puts, however, are not profitable yet. They're actually 5 cents lower than what I paid somehow. I don't know how. But this must be the spread. But if its stock is up like this and you short it, I would imagine that that's a smart move.
Not to say they're talking their book, but if they don't own them, they're less inclined to continue to like them.
There's some of your friends on this show.
But yet it's still...
They're still my friends, and Steve's my friend, whether he likes Meta or he doesn't like Meta, and I like him better today.
All right, fair enough. Jason Snipe, the idea that these things are going to continue to run. Look, Tom Lee, he told you to get into FANG. Now, I mean, obviously he's been bullish through the bad period too, so I'm not suggesting that he's called everything correctly within the last year, because obviously he's not. But he said early on in this year, get into FANG. It's gotten beaten down.
It's gonna go green. It's gonna fucking go green.
2 consecutive quarterly gains are not indicative of a bear market.
70.
How do you see this trade?
What in the fuck?
It's interesting.
It's fucking green again, guys. Holy fuck. You gotta be shitting me.
At the beginning of this year. But I look at the NASDAQ, to Kerry's point, the NASDAQ was down 34% last year, right? The NASDAQ 100 is almost 20%.
He's over the weekend. I can tell you that right now, because I'm losing 2 days of fucking time decay. I definitely don't want to hold them. It's fucking annoying.
I mean, we don't need to have 5 years worth of gains in
3160. 3160.
But I mean, let's be real.
I wish I could have just shorted physical shares. Then I would have held that. I don't give a shit. This is 3% cost of borrow. 3160. Yeah, now these puts are getting fried from the sideways action.
Kind of pace, but is this still the trade you want to be in, or is it time to revert back to what you thought was going to work, like in energy, for example? As I look right here on my screen, energy's up again. Okay, it had a 6 handle on it not that long ago, and now it's pushing 76.
Tesla, did you get hit on that?
And energy was down a week ago, 13%. I think it's down now roughly around 5%. Oil has appreciated some, and I think that's part of that trade. I do agree with the fact that it's likely that you should take some off the table as it relates to some of these tech names. I think some of the
6, 7, 8, 9, 10, 11 straight green candles. 11 green candles. Going to 12.
So I think some of the more cyclical oriented
15 minutes as well. Jesus Christ. Oh no. No, that's not good for me.
Cyclical plays, deer. Weiss. I didn't mention that one. I don't think
my profits for the day are gone here.
Right, a couple days ago.
Because apparently, if you short at 11 green candles in, there's still room to run. This was 5,900% a second ago, now it's 7,400%. What the fuck?
Last week, but I bought some below 400 and I added to it. Deer's a pretty interesting story. You're seeing in small ag equipment, you're seeing
it's the fun name of being called AI. It's got the name AI. That's what it has going for, from what I can tell.
And by the way, the farm is still healthy, so I like it. It's showing great fundamentals in the last quarter. I think they'll continue this quarter. There are some unknowns, of course, but the price I'm getting it at, I like it. Look, I just want to go back to the Qs a little bit. That's a trading position, so I don't want people to think I'm long the Qs, staying long the market, or Meta necessarily. So I could be out of those at any point in time. They've been good trades, not great trades so far.
I mean, you could be out at 12. You could be out at 12:20. I'm looking at the clock. You have 20 seconds.
They're nice gains. Hey, you know what? Annualize that. That's all I'll say.
Yeah.
Okay. Market presents opportunities to make money. I make money. I've got a long-term portfolio and a trading portfolio. Nothing to be ashamed of. I do it.
You don't have to get defensive about it. Just you don't have to be defensive.
I'm not. I'm trying to explain to you. I'm just trying to react to your inability to keep pace.
I think we understand that these are trading positions for you, like almost everything else that you have been in and out of with warp speed in the last several months. So you'll keep us up to speed on that. I know you will. Carrie, before we take a break, you're trimming booking, you're trimming O'Reilly.
290 ask, 280 bid, 295 ask, 280 bid. Drop the fucking stock already. I'm getting annoyed. Let's go. 31 to 60.
So it's a tech stock. It's about travel. People have been spending a lot of money traveling, and if there's a slowdown and consumers spend less and businesses cut back a little bit, I don't think that's great for booking. We still like the stock. It's a large position for us, so we cut back. The same with O'Reilly. Been an excellent stock. 2022 way outperformed the market. Wasn't down.
Straight.
And continue to earn nicely, but the whole idea is people are driving more, spending more time on the road. Maybe that sort of played out in the short term, and where the stock is now. Again, we're not selling the whole position, but trimming. United Healthcare is a name. So while we have a growth bias,
It's like taking
it's a bit of a value stock. It's
people.
been underperforming this year. It still has growth. You have a country with 3.5% unemployment. Even if that number rose a little bit, still all these people need health insurance. They're number one in the category, and we think they'll have earnings growth.
7 cents. It's like stuck at 31.80, and then it just pops 15 cents out of nowhere. Just pops.
Yeah. All right. We're gonna take a break.
So you can't find someone to pay 31.81, but you can find a bunch of people to pay 31.95. 31.94. Okay. That makes sense. Yeah, that sounds about accurate. Not.
Each week we'll bring you stories with entrepreneurs, celebrities, and even some politicians who are changing the game on criminal justice.
Hey, what's up, world? This is Sway Calloway. Check out my friends Chris Redness and Maserati E. They're the new hosts of the Last Mile Radio.
The Last Mile Radio, Saturdays at noon East on Triumph.
I guess I should be looking at this on probably a 3-minute. Yeah, fuck. Okay, so that was my mistake. It's on the 3. It's not on the 15, and it ain't on the 5. It's over on the 5. As you can see, all this gapping. You go to the 3. So bang, the 3. So that might have been my mistake. Where every red candle is basically nothing. It's almost nothing. So there's really not even much opportunity in here to do anything with shorting it. If it obeys 3 and it comes down and meets, which, I mean, it's struggling to come down at all, so I don't know if that's possible, but, maybe it comes to 31.65, I don't know, but I don't know if that's going to be a profitable put at that point, because of time decay, so I was looking for a move right away when I entered. I saw that, and I said it's time, right? I saw all this, and I said it's time for one red candle. And this has 4 more minutes to close, and it'll be the first red candle of the day. But, I mean, there's still 4 minutes where this could be fucking green. So, I guess we'll see. Hopefully, we start seeing some profit taking, and it just drops. It's okay if it drops and then finds actual support instead of being in this no man's land bullshit. Which, how the fuck do you invest in this? RIOT's right back up. RIOT's high of the day. High of the day on RIOT. Any money today, and I was profitable all day. Oh. So gay.
It's the little things that matter. From next generation sequencing to immunotherapies, we use the most advanced techniques and treatments.
And it's swinging like 10 cents to the upside too, which is also like, what the F? How are you swinging that much?
See how our experts are with you every step of the way.
Come on, there. Okay, good. I closed for a profit.
The market, because the Dow was just up 300 points. We're at the highs of the session on what's been a very, very good quarter.
To God, if you can't short this stock up there, what the fuck? When can you? You know what I'm saying? On the day for a swing play. What the fuck? So perfect. Call out worked. We're good. Still got it. Don't have to sweat it. It's quick scalp. Quick scalp, in and out.
Obviously. And then the stock was down a lot. And I remember you telling me, see, I got in the right time. This was a good trade. This was good. But why are you out now?
Well, the day I told you that, the stock was up 50%, so I was feeling really good about it. And then the next day, it was down. And here's what happened. It was our smallest position by a lot. And we bought it because we felt that the deposits fling would be contained. It would be, at the worst case, 35% of deposits. And we're pretty sure that number is over 40%. They haven't divulged it yet. But, you know, the rumor says there's at least $70 billion that left. And there was a real run on the bank. You know, it was just too bad what happened. Great bank, we believe. But at that point, on its own, it's insolvent. First Republic cannot exist on its own with all of the incremental money that's come into the bank and what they borrowed.
Reward wasn't there for me. It's $1,500 or $1,800 or some shit for 5 puts.
Which means they have to price
Three.
the assets.
What the hell was it? 290 times 500.
You know, 20+%, maybe 30%. And
Yeah, $1,450 at risk, or you know, I don't know. You get that? 2 cents a share? Probably not even 20. Well, yeah, probably. I guess that's okay, I suppose. But trying to just get through the week on the plus. Would love my FRCs to fill, but they won't. So I made 350 today, which is not that big. Pretty much nothing. When I want to make about 350 a day. Hold on a sec. 9.086 divided 5. It's a little shy. I need to make around 447 a day next week. A little shy of what I wanted. 25% shy, really, if you break it down into percent. So about 25%.
I just, recall the fact of buying it, making such a positive case about it, as, by the way, Jim Lebenthal did as well, who has also since sold it, doubling your position once it's sold off, so showing, an even higher level of conviction about it, and then now selling out and taking the L.
Yeah, well, I think if the stock sits here at $12, $13 a share for 6 months or longer, and we can deploy that into other
nothing.
other stocks.
OCX,
I think you said Adobe.
Digital Ally, that's trash.
If we can make more money in the other trades that we put in, I think that's better use of the capital. And I understand that it was disappointing. It wasn't what we wanted, but seeing what the numbers were really about,
Tickers.
and the fact that, look, they haven't had an offer. It's not as if, J.P. Morgan, who was trying, Jamie Dimon coming to the rescue, he hasn't made an offer on that bank, and none of the other large banks have. So we think it could be a longer, drawn-out process, while they analyze what's there and what isn't.
No, I hear you. Look, I mean, it's easy to come on and talk about what, Weiss? What is it?
I was just saying, I don't understand this trading mentality. I just don't understand the trading mentality.
Are you being serious, or are you making a typically bad joke?
No, I'm making an observation that it's okay to trade some and it's not okay to trade others. But what Carrie did was the exit, I think, was great. I mean, the facts changed as she perceived them to be, so she controlled the risk. So why stay in a bad trade longer than you have to when the catalyst for getting in doesn't exist anymore? Makes perfect sense.
Yeah, no, obviously. I merely was going to point out, before I was interrupted by you, of course, that it's easy to come on and talk about all the great trades that you've made.
My job easy, but I feel bad.
For everybody, but when you have a losing trade, something that obviously has been as volatile as this, I just appreciate the honesty on it. That's all. How about banks in general, Jim?
So the banks are in this tug of war between what's gone on with their book value and what's going on with their earnings power. And by that, I mean a lot of the banks have now been priced at a much lower percentage of book value. And that would give you the implication that you should buy them, and I am bullish on them. But you have to offset by the fact that earnings are going to go down, and for a number of reasons. We talked earlier in the show about deposit funding, the cost there, regulations. You know, Scott, the FDIC cost that's been projected for Silicon
They
Valley Bank,
close.
whatever it is, 20 billion,
Nothing.
23 billion. Yeah. That's not coming from the taxpayers. That's coming from the
Wednesday.
banking
What do we got
system.
for
That's
Wednesday?
cost.
Already back up. Look at that. Look at this turd, man. One.
Tug of war, the yin and yang, but I do think that where they
So I'm still looking to short at this spot. Like, there's no way. It's just popping because it has a catchy name. Ticker. That's it.
Tightening. White House talking about these new proposals.
17 billion market cap. Kangora Brands. What the hell is Kangora Brands? Simple Foods Group Company. Yeah, okay. These are okay. So Wednesday we got something. Wednesday we got CAG and we got Simple. Simply Food Group. Food. Calls / long.
Let's just say in the next quarter, since we're looking at that time frame specifically.
Yeah, so, well, you can even look further than that. And what I'm saying is the yin and yang here is everything you just highlighted is part of that earnings contraction that's going to happen in the banks. However, there are positives, and this is where an investor takes a risk, right? If you can quantify the risk and you can see the opportunity, you take it. I might be wrong on this.
What are the positives?
Yeah, where these stocks are relative to their book value, number one. Number two, you know my base case that we're not
surprised to say I don't know every ticker that exists. Boat Kangora Brands is a packaged food company.
Yep, it has been. That is for
over 90% of revenue and profits. Yeah, okay. Sweet. Packaged food company? Hell yes. This is like your fucking frozen foods.
I know I said this, don't get mad at me, but look, Boeing wants to manufacture planes as fast as they can get the engines. Ford and GM as fast as they can get the chips. Factories going up all over the world. I hear you. Factual. Manufacturing has been in recession the past few months. I don't think for a second that's where it's going to stay.
All right, straight ahead, we'll show you our chart.
So I'm bullish on that.
Pull back for one semi stock. We'll give the name. We got the trade. We'll do it next.
You want your business to succeed, but need working capital to get things moving. The financial assistance your business needs is waiting for you at
Nothing.
Funding, your #1 trusted source for all your business funding needs. Just go to myeverestfunding.com or call 844-FINANCE. You'll see
Installation brand.
to get funding. Everest Business Funding helps business owners get the fast working capital they need with a hassle-free application and no hard credit checks. Everest has the best deals for your business needs and fast funding, usually the same day. Everest goes
provider of alcoholic beverages in the USA. Well, that's been down, so I'm going to actually say puts SCZ alcoholic distributor. Well, there you go. You learn something new every day. But I'm pretty familiar with the space, and what is it? What the hell is their ticker? STZ.
I thought learning a language would be too much work. Then I discovered Babbel. They make learning fun. J'aime Babbel.
Babbel's lessons only take 10 or 15 minutes. Quick and easy. And soon, you turn and realize, hey, I'm starting to speak another language. How'd that happen?
My friend from Italy said my accent and pronunciation is perfect. It's because Babbel's lessons are designed by language teachers and voiced by real native speakers. Each lesson is like living in another country for 15 minutes.
I love that there's all kinds of ways to learn. Babbel's podcast or games or videos. You can even join live classes with a language teacher.
You learn words and phrases you actually use in real conversations.
In 3 weeks, I was starting to speak in another language. So easy.
If you want to learn a language, there's no faster, easier,
sketch as hell.
Go to babbel.com to try for free. That's BABBEL.com. Babbel.com.
Small businesses are the cornerstone of our towns and the pride of our country. We at Capitus provide financing for small business owners like you, the ones who keep the country running. And Capitus can help keep you running with financing built for the unique needs of your business. You've made this country great. Now let us at Capitus help you become even better. Start your journey today by submitting an application at capitus.com. That's KAPITUS.com.
Join me for Fast Money, 5 Eastern, weekdays on
112.
Welcome back to Halftime Report. I'm Contessa Brewer. Here's your CNBC News update this hour. Former President Donald Trump is publicly criticized.
I think set up for a beat Levi Strauss. I think they are just, you know, everything's set up to beat this quarter. Everything feels like it's beating. I don't believe it's real at all. Don't get me wrong. I think it's all fucking bullshit. Friday has nothing. Yeah, nothing.
And its former chief financial officer,
Friday has nothing. Alright. So, none and none. So, there we go. We're done. Very
by a powerful tornado in the state. The storm swept through the state last week, killing 25 people. And a coroner in Sharkey County, Mississippi said at least 13 people died in the small town where the Bidens will visit. And the White House has proposed a new rule to allow the Interior Department to release public lands for conservation. The Interior says doing so would help states and companies offset the environmental impact of their development plans. Scott?
All right, Contessa, thank you. Sure. That's Contessa Brewer. Now to our chart of the day. It's Micron. Shares of the chip giant pulling back on news that Chinese regulators plan to dig into Micron's supply chain and look for any quote-unquote hidden product problems. Our Christina Partsinevelos at the NASDAQ with the headlines dragging that stock down by a little more than 2.5%. Christina?
Scott, the details in this report right now are scant. We don't know if regulators in China are reviewing DRAM or NAND chips and if either will be banned during this review process. So timing is also suspect since Taiwan's president is visiting the United States this week. And Japan
kaputted.
just announced last night
Chasing, FOMOing into Mullen at 15 cents, and now you're at 13.5 cents.
The memory market, though, is dominated by three major players.
So you're down 11%, like shit like that, you know. But yeah, the fucking Bed Bath Beyond one is just laughable. That's hilarious.
So it's pretty much a double-edged sword, hurting both sides. Should China follow through with a ban, there would be a near-term impact
we're done.
Since as of fiscal 2022, China and Hong Kong contributed 16% of total revenue. And it would also signal a broader shift in Chinese policy, leaving other U.S. vendors with large Chinese exposure at risk, think Intel, AMD, NVIDIA, and that could dramatically hurt the sector, like the SMH, like the SOX. But as Matt Bryson at Wedbush says, it's still too early to assess the ramifications, and Mizuho's Vijay Rakesh suggests buy this dip.
Well, we'll see, Christina, whether...
Get 3 more people in this class. I want it full.
Thank you very much, Christina.
Let's go, people.
Jason Snipe, you don't own Micron, and I don't know if you have any interest in it or not, but you do have NVIDIA and Qualcomm, and it has been an incredible quarter for the chips.
Without a doubt, Scott. And we mentioned this earlier. I mean, the semi space is up around 30% year to date. But I'll pick on Qualcomm for a second because I think, you know, we talk about NVIDIA all the time. Qualcomm, what I really like about what they've done is they've really started to work on diversifying their revenue stream. You know, they're working through their inventory. There was a miss on revenue last quarter, but it was a beat on EPS. But the drawdown in inventory was a $2 billion hit to revenue. But their silicone and IoT portfolios continue to grow. So I continue to like the stock. It's up around 15%, and its value, you know, still trading around 12 times earnings. So I like this name here.
Jimmy, that's a name for you too.
It is.
Qualcomm NXP as well.
Yeah, Qualcomm in particular, because I don't feel like I've spoken about it in a little while, but what you're playing for here is the potentiality that the handset market, the smartphone market has bottomed. Now, I can't prove that, by the way. I'm not saying I know that. What I am saying is that at some point that will have bottomed. The opening up of the Chinese economy is likely a catalyst that has the handset market getting back on its feet. You know, we all know, and Jason will know this, that it's more than handsets at Qualcomm, automotive, Internet of Things, but unfortunately, the bulk of their business is handsets. So you're really playing for that recovery. At the same time, it's awfully cheap. I mean, this is awfully cheap to stay in here and just wait.
It's like the same scammer. He comes in every fucking week with a new account. 8,400% on AI. Man, I'm glad I got the hell out of there. I'm glad I got the hell out of there. Jesus Christ. Play of the week, but not that I care. Everyone did so well on CCL, even on Rumble. You know, you're still technically green on Rumble. Intel Corp was insane. So
there's the group: Jenny Harrington, Liz Young, Bryn Talkington. Please don't miss that. CNBC.com/ProTalks. We'll be right back.
is where you find who's popping.
This will be the next one.
And who's popping next?
Eight. Pump sky high and then it's shit. There's nothing there. It'll dump.
Exclusively on the SXM app, available anytime and anywhere. Just search Hits One.
The IRS is the most powerful collection agency on earth, and if you owe back
Make money in the meantime.
news isn't good. The IRS is raising the interest rate it charges on unpaid taxes, and further rate hikes are expected. Most people don't know it, but the IRS adds interest charges to your tax debts daily. So if you owe the IRS today, you'll owe even more tomorrow.
It's probably been climbing since what's her face bought it, Kathy Wood, right? Of Art. So I'm getting hungry here. I need to get some food. Holy shit! What's going on?
Tax professionals specialize in the Fresh Start Initiative, a powerful IRS program that can save you thousands if you qualify. In fact, the experts at Optima have resolved over
Stop because Netflix is making cuts.
for a free consultation.
Call 800-901-3022. 800-901-3022. 800-901-3022.
Optima Tax Relief.
Some restrictions apply. For complete details, please visit OptimaTaxRelief.com.
Even this one. Good time to short. 88 RSI. Take out some fucking short shares. Roku. Fuck, 100 shares short. That's a lot of money, isn't it? 6,600 bucks. Where did that go to? Let's go look at the 5 real quick before I get too excited. I did this last time. Okay, we could go to 64.80. Sure. 100 shares short on Roku. 100 shares short. 100 shares short. 100 shares short. 100 shares short. Let's do it. 100 shares short. Could go to 10% and totally burn my ass. Or I'm going to short it because it's 81 RSI. So I'm going to short it. Shorting Roku. Again, this is a scalp to like 65 bucks. Nothing major. Weekend cash. Weekend cash. 65. 65.03. I don't even want to pretend like I don't want 65. I want, you know, above 65 so that it fills. I may even do 65.05. Let's do 65.05. We'll do that.
Charles Schwab was one of your picks. Financials was your sector. Now, obviously, you didn't know that there was going to be a banking issue, to say the least, during the quarter. But let's talk forward rather than past. Schwab now and the financials now. What do you think?
15 says obviously much closer to
everything about banks, and you know, it's strangely, you know, it's also a San Francisco originating
64 and change.
It's in Austin today, but Silicon Valley and First Republic both are originally from, you know, San Francisco. So you wonder if that had anything to do with it. 80% of their deposits, or more than 80%, or 250,000
5-minute chart on the Roku.
So insured.
Going with the 5-minute.
They have gotten inflows in every day.
So I shorted it at what? The hell did I short it? I don't even know.
So it's hard to
60. Let me read that. 65.60. 65.60. So we'll run with that. AI's it's still coming down on the RSI, so that's good for that. That needs to come down. That's bullshit.
Types of financial companies, and you know, in that group now is PayPal and all the payment companies, which had terrible years last year, and we thought that would turn around. It hasn't yet, and so we think there's still potential for that part of the market and that sector. You know, some of my other picks were good, like Align.
No, Align was great. I'll lead you there. Don't worry. You don't have to cover up the losses with that. I got your back. Don't worry about that. Align up 48%, top 10 NASDAQ 100 stock in the
Into one hotel that had Roku. Who gives a shit? It ain't no $500 company. Tesla, it's, you know, 500 and then Netflix is 500. How the fuck is a Roku 500? But it's way down, right? I mean, the gap is 67.80. So.
NASDAQ 100 stock in the quarter up 39%. But, you know, do you want to stay with Palo Alto? And what about the losers that you've had?
There's upside is what I'm trying to say, but
by the way, down 20.
upside for longs.
As you mentioned, I mean, it's up 39% year to date. You know, EPS growth was around up almost 80% in the last quarter. Revenue growth was up 26%.
Swing here. Could be a 401k stock. Let's take a look. Let's take a look at Leaps. See what they even have for October. If you bought shares now, what could you go? Oh, damn. That's pretty good. Holy shit. If you buy Roku at 65, you could get 1160. Holy shit. On 60, you get 17%. That's pretty fucking good. Holy smokes. Damn, I like that. Not gonna lie. Oh, I gotta change this. Let me change this. Roku. AI. Let's go. FRC. Rum. C185. Okay, that's pretty good, guys. That's like, you know, that's pretty good. You could do. I mean, that's pretty juicy. So if you did Roku. 70, 65, you know, 65, and you get in at 65.60. So that's a minus 63 cents. So 11. 11 on 65, you get 17%, 16.92%. Put that in the longs, put that in the 401 longs.
In terms of GXO, it just got beaten down too much, and they benefit obviously from e-commerce, but also the outsourcing trend. So I'm comfortable with that. In terms of profitable healthcare, I still like the sector. You know, about the same number of sectors are down that are up. And it's primarily consumer and technology, as you pointed out. So if you haven't been there, you haven't done well. I still like profitable healthcare. I still think it's going to do quite well.
All right, up next, Mike Santoli with his midday
25.
word. We will be right back.
1025 on 65.70. 15.6.
Let's face it, talking about life insurance is never easy. But after we watched a close friend lose her husband with no insurance, we decided that wasn't going to happen to our family.
Yeah, but
570. 6.54% upside.
Heard about Ethos Life Insurance. They're a new kind of life insurance built for people on a busy
Upside.
schedule who don't have time for unnecessary doctor's
21.
visits,
What is that?
fine print,
15.6.
fees. You know, who want to keep it simple.
I couldn't believe how easy
22.14 upside.
we had an estimate of what it would cost and what sort of policy made sense for us.
I never imagined a life insurance could be so affordable
and accessible.
The peace of mind knowing that our future is secure, it just removes a lot of the fear around getting older and
the unexpected.
I'm glad we talked about it.
I'm glad we went with ethoslife.com.
This, but honestly, there's a reason it's down here, guys. There's not a reason. There's a reason. So.
Question from Search Kings. What strategy are you using for your digital advertising? Are you blindfolded, spraying wildly, not knowing what hits and what misses, but paying for all of it anyway? Or the smarter, more profitable Search Kings approach?
Could potentially be 39 bucks. Intel is squeezing? Oh god. Serious? I can't watch all of it, man. There's too much.
Hi, Gwyneth Paltrow here. We do everything with our hands. We type, text, chop, mix, cook, open jars, play music.
Squeeze, bro. But I mean, it's a squeeze since I started talking about it on the 24th, which is.
Do anything, and that's why I love CopperFit hand relief compression.
Tell which day is the 24th? Right here.
And text with complete freedom.
So I mean, Intel was a fucking insane week. My sister got shares, so she's happy. 76 RSI though, guys. Okay, so it is up. We're getting close to oh no, I'm looking at the wrong chart here. Damn it.
CopperFit hand relief. Give them a try. You'll love them.
Get yours today.
Yeah, like if you can't, again, it's the same thing. If I can't short up here, where the hell can I short? You know, I might have to come up to 65.10 now though. Fortunately, because it keeps bringing the 13 up. Gotta go like 65.11 now or some shit.
All right, Mike Santoli's here, our senior markets commentator, for his midday word on this last day of the quarter. I mean, obviously, what stares you in the face is the Nasdaq's 16% gain. S&P is up 6.5 because of tech, obviously.
Yes, on a quarterly basis, that's true. And it was the story coming into the week. It's become less the case this week that it's that narrow and that exclusive. You equal weight S&P, I always talk about up 2.5%, 3%.
That's incredible. That's a nice way to finish the week out for Intel, though. AI is pushing up Intel, for sure. Okay, Intel was way the fuck oversold. I've said this so many times. Like, that was free money plays. That's basically what it comes down to, so...
It seems like, though, we're not going to get there being particularly overbought. We're not going to get there with the market being particularly overloved. In fact, probably the opposite. There's the way in which the narrowness of the market, the fact that everybody could say, aha, it's only 5 or 6 stocks, that it makes everyone feel a little more kind of prudent and careful and maybe reassured that it's okay to miss this because I'm not going to participate in that game.
You know you're going to get at 4,100, assuming that we do get there and we're on the doorstep. Should you sell at 4,100? That's going to be one of those benchmark levels that you say, should you sell?
No doubt about it, and I know that a lot of people would maybe stretch it to 42 because
41,
you did get up there, and we're talking about 2 or 3%. It's crazy that this is the game we're playing, whereas it used to be, oh, buy the 5% pullback, no big deal, because you were confident in the longer-term trend. People are not confident that we have a new uptrend here. So it's going to be a legitimate question. Again, though, it doesn't feel like we're all that far out on a limb on the average stock. If the market can essentially broaden out a little bit, and you do have the better seasonals kicking in, and all the other sort of tactical clues that say when the market does X, what happens after, they're starting to look a little better to the extent we can rely on those things.
See you in a couple hours. That's Mike Zintel. He'll be back, of course, for his last word today during closing bell. Grade My Trade is up next. We're back in just 2 minutes.
Don't be a hard rock when you really are a gem, baby girl. From the female MCs who laid the foundation to the ladies making history right now. Queens of Hip Hop is a channel dedicated to the women that rule the rap game. Queen with a crown that be down for whatever. Queens of Hip Hop. Watch the Queen Countdown. One of more than 200.
Turner cashed his out for 210, so some profit. I think Salty's leading with $1,000 on Tesla. That was all her. Tone Man cash covered puts on Rumble. He made 75% on Rumble cash covered puts. Let's see what we got. I did cash covered puts, but I don't even post anything. Spy calls for Frankie. He's probably mad he sold because he sold at 404? Or where did he sell? 406. So maybe not. It's only 407. So that's good. He did good there. I am done with the fucking Spy. I can't stand the Spy anymore. Cold Feet. Hope I didn't sell early. 40% profit? 40%'s 40%, bro. Plus 40% overnight? That's a win, baby. One Tesla call, almost 300%.
That's covidtaxrelief.org. covidtaxrelief.org. Cards issued by Celtic Bank, member FDIC.
So, yeah, we got some in there. We got to get some more people posting some fucking gains in there. How the hell could there be that little of gains when I've called out a whole bunch of reversals and shit? What the fuck's going on here? People are not sharing enough. I want to see some people sharing that shit. The hell, guys?
Points as incentives, but those points amount to less than their worth in real cash value. Ramp's business cards offer you cash back, real money in your pocket. Plus, you control who spends what with each vendor. And Ramp software collects and verifies receipts automatically, which means you'll stop wasteful spending and close your books in hours instead of days. Businesses that use Ramp add up to 3.5% to their bottom line the first year. If you're a decision maker, adding Ramp could be one of the best decisions you've ever made. And now get $250 when you join Ramp for free. Just go to ramp.com/news. Ramp.com/news. ramp.com/news.
Fight Riot. You gotta play the chart, bro. You gotta play the chart. That's why I was scalping pennies, bro. Pennies. Even this, I have to come up. The 13 came up. I gotta keep coming up. Because I'm not going for anything less than the pennies. Than what the chart's willing to give me. Chart's willing to give me 65.15 at this point. You know, if I put it to the 15, yeah, I could get more, but I don't trust the 15 because look at the gap. So I'm going to the 5. That's why it's important to have 2 charts, right? Did that just do what I think it did? Okay. 65.39. 60. Okay, sorry, it's just moving that much. So I mean, stick to the chart. Unfortunately, even if that's, you know, not the kind of return you want to see, it is what it is. Intel, I'm very happy about Intel for everybody. No one's talking about these kinds of stocks because they're not. I'm not bullish on Roku. Kathy Wood is. And if the market wants to be bullish on Roku, I mean, it's down from 490. Okay, it's down from 490. So it's not like there's not money to be made there. But the bottom is 39 as well. So if is it overblown? I don't know. You know, who knows? I couldn't be the one to tell you that. If Kathy Wood's buying, sometimes she has the reverse effect. The stocks fall, but lately they've been going up. So, what the hell just happened there?
The financial assistance your business needs is waiting for you at Everest Business Funding, your #1 trusted source for all your business funding needs.
This is Zinga today. This is hilarious. This is them today. Oh, sorry, this was them yesterday. Roku shares trading lower after they announced restructuring, which will include charges. This was yesterday, and now look at today. It's up 6%, which is why these Roku calls are going crazy, because no one expected it to pop. No one expected it to go up, because they were trying to FUD it, right? Neutral. They got a neutral rating with a price target. They lowered from 76 to 64. Not that I care about some of these price targets, because you had like Charles Schwab giving out price targets, and then they got fucking bought out and don't even exist anymore. Roku doesn't seem to want to give me what I want out of it, so I might just close. I don't want to fight a bullish trend. You know what I'm saying?
Less than 200,000 miles with an auto warranty about to expire or with no warranty coverage at all. Due to a decline in the economy, CarShield is announcing a low-cost month-to-month vehicle protection plan that is now available to the public to save any driver out-of-pocket expenses on future auto repairs.
I'm not fighting a perma bull. It's looking like it's ready to cross to the downside here right now on the 5. Not on the 15, but on the 5. So if you look here, right? If you look right here, you know, it can reject and just keep going, right? But if it starts to cross, then I'll be more confident to re-enter. If I go to the 15, right? We crossed over to the upside in the pre-market right here, approximately. So, and it hasn't looked back. I know I'm okay shorting it, but I'm not touching the options. I'm shorting physical shares. Physical shares. Less risk, less reward. I'm okay with that. I'm okay with less risk, and I'm okay with less reward. Yes, it'd be nice to have 25,000 bucks go to 150,000, but it could also go to 0 real fucking quick. So, if the market wants to pump, which it's showing, the SPY is 407. Into the highest interest rates we have seen since the 1980s. You got to be fucking kidding me, right? You got to be fucking kidding me. It's a joke. That's a fucking joke. That ain't normal. But I mean, today, doing pretty good. Doing pretty good on my wins here. What do we got here? Closed out all this shit. You know, I mean, it all adds up. This all adds up on the day. You know, that's pretty good for a day. I only lost on one position. 10.50 on MCB, which I fucked up and I sold at the wrong price. Otherwise, that should have been pretty much no. That should have been a $20 gainer. Shouldn't have been a loss. So
they did an offering to take GE out of a third of their position. GE will sell the other 2/3. It's a great way to participate in what's going to continue to be a great period of time for airline purchases since they finance them.
Okay, I don't have much time, but since it's new and you're recommending it essentially by saying it, you plan on being in here for a bit?
Yeah, I mean, I bought this at the Lowe's, so unlike some of the others,
I'm
this
just
is a great buy, value
section.
purchase.
So people, I guess, can see I'm trading. I mean, I would imagine you know I'm trading, some of you, but maybe some people need to see it. I don't know. Who knows? And what is that on the day? You know, I got fees though, so it's not exactly accurate. Like that 720 is actually a $2.80 loss because I paid $10. Saying like $300, $313, and I would say you cut out fees, so it's like $250, something like that. But just that can't be right because I must be missing something here. Oh yeah, I have shit in the TFSA too. My bad. That's not showing. Which yeah, so I'm up on that. Another. CNA, you're gonna laugh. Yes, these are physical shares. Fucking trash companies. Oh man, they don't make money. Piece of shit. What is AMC today? 494. Yeah, I knew those fucking 550s would be dead today. Dead on arrival 550s. Total bull trap on that shit. Just a bull trap. AI is 3202. Okay, there you go. Back to 32 on AI. What did I sell it at? Or what did I close it at? AI. Orders. I don't really know because I was in options. Okay, what's the option at? AI. 265. Wow. Yeah, that really fell off a cliff. It's coming down and the put is down anyways. Roku went 65.16. Damn. So it did touch. So this is what I'm talking about the charting though, guys. You know, if you have faith in the charting, and if you're noticing these crossovers, right? Oh, let me pull this up. Now, this is stuff I'm going to go over in the class tomorrow, right? Tomorrow morning I'm having a class. It's $35. Meets the dude with the Mohawk charges $400, and then Meet Kevin charges $1,200. So if you want to pay $35, you can come into mine, or you can go to Meet Kevin, and maybe you'll have a private jet too. Even though he built his entire wealth with properties, and now he's touting himself as a stock investor, which he is not. He built his entire wealth flipping houses. So anyways, he charges $1,200, I charge $35, and I've been right on 100% of my callouts this morning on the entire live. I haven't had a wrong callout. So you short here and you close here. Fucking it's pretty accurate. I closed about here. I didn't actually close here. It just shows you the one candle. I closed this last candle though. So I left some meat on the bone. But here's your crossover to the downside, okay? And then RSI, you're looking for like 55, I think it comes back to, because it's still bullish, okay? It's still bullish. Until you get into this zone, you're still bullish, okay? And that's on the 5. Now, if we pull it up to the 15.
The year-over-year rate coming down 0.3%. The January core 0.3, a tenth better than expectations, lower than the January rate. And there's the core
saying a lot more, right? But again, you have that massive gap. So you have, what do you have here? 64.50 all the way down to 63.50. You have a $1 gap. So 64.23. So this is actually higher than the gap. So I don't even see it. You know, maybe by end of day it comes back to this. Maybe. I don't know. Could just continue to rise. Okay? Yeah.
The core is falling only slowly, down less than a percentage point in a year, and the measure watched closely by the
still high. Nowhere near on the 15, okay? So this will rise like this. So then maybe this comes back. So you're looking at like 64, 80, some shit like that.
May rate hike with the probabilities 45, 55 for that quarter point hike, but it does swing back and forth almost every day. So the banking turmoil, it continues to be the wild card here. Even if there aren't major failures, and that's what we hope happens here.
Something going on there. I said hours ago, SPY's going to come back to 45.
but also growth and maybe replacing rate hikes for what I think, Dom, that'd be a lousy trade-off.
Okay, so Steve, if you look at this on balance,
It's already heading there. It's at 40. It just broke back into 407. So where are we? Where are we? This is, what is that? Yeah. So at 10 a.m. It's like 2 hours ago.
Are supposed to be tapping the brakes on the economy.
I guess that's only an hour ago, eh? An hour ago?
People feel a little bit more optimistic about the coming months for markets and the economy.
So here's the problem with all this.
They're going to try to destroy the calls and the puts at this point, okay? So they're going to, there's no way they're just going to let it run all day. Give me a break. That's pretty rare. I mean, it can happen. Let me take that back. It can happen, but it's pretty rare.
We keep thinking we're making progress. And the January thing was a real, game changer in the sense that not only were the numbers worse than expected, but they'd gone back and they revised up the prior numbers. So the inflation progress we thought we were making was kind of revised away with a couple, swirls of the pen right there. So, yes, it's 1 month. But as you know, 1 month does not a trend make. We did have the consumer slow down this month after blockbuster numbers last month. So all I can tell you is we have to wait and see and put a couple good months together. Remember, Powell has said he wants to have, substantial evidence that things are going the right way before he changes his tack.
All right, so one data point down. A lot more to go. Steve, stick around because we've got a bigger conversation around inflation. It may be cooling off, but our next two guests don't expect the Fed to take their foot off the gas yet and see another hike perhaps in the cards in May.
Sign up for this class. No. All right. Let's keep spamming it.
Yelena Sholyetova is a U.S. economist at BNP Paribas. Thank you both for being here. Steve just laid out the groundwork and the context for what we saw in the inflation data this morning. Yelena, perhaps we'll start with you. Was there anything about it that makes you feel as though the inflation picture is more or less of a threat to the U.S. economy in the coming months?
I think inflation remains a big threat, and a little bit of a cooling is just simply not enough for the Fed to stop tightening. I mean, look at the report. Look at the income data today. We still have tremendous strength in terms of labor income. So look at wages. They're still growing. So as long as wages are growing, the economy will be okay, and inflation will be really slow to cool down. I think, the latest developments in terms of the banking sector also didn't really alter much what consumers are doing. Look at today's data and
some fucking regional bank, Burford Capital.
There was not much of an impact there at all.
Burford Capital trading higher after the company announced Southern District Court of New York has released its decision on its Peterson Union claims against the Republic of Argentina. Like, I don't even know what the hell that even means.
For them to decide what to do next.
Another announcement will be made in due course. So I don't even know.
Ethan, we've been talking going all the way back.
On March 16th, the shares were trading lower after its business activity was reported on. No clue.
One thing that we have seen during that span is a near zero interest rate policy for the better part of a decade plus. I've heard it referred to as a tough line to straddle, the Fed, in trying to kind of keep the economy going and contain the banking crisis and everything else. Is the Fed's job impossible?
This is, guys, sorry. Can't catch them all. That's the beauty of the Discord. If I miss something, there's someone else in there to put it on the radar. I'm just going to have to be satisfied with my little scalps and trying to get my 8.6% a week on the portfolio. It was halted up 2 times today. Huh. Roku's right back to 65, so that's where we thought we were going to be. That's heading lower, so it's heading into that 15 zone. It's just, I want to see this chart real quick. Oh god, it gapped up? Holy shit. Okay, in the middle of the day? How's that? It halted at 770 and gapped to 870. Holy fuck. 1 year, 1 day. Yeah, I'm shorting that though. At this? Are you kidding me? Oh yeah, but I can't get shorts. I'm telling you right now. 5 year, 1 day. It's a new stock, and it's like almost at all-time highs in a single day. So if I could short this, like I'm not even joking you, which I'm gonna tell you right now, is not gonna have any fucking shares for me to short. I will literally try. You'll see it come up probably, and then it'll be a risk review, and then I won't be able to get any.
Addressing the financial problem first and the inflation
Yep.
problem later, and they've done it multiple times in history.
Ethan, this is a good point. I want to stick with that just for a second here because
You're gonna hear
the banking stress.
It's gonna say no, we're not gonna let you short it because this fucking broker is trash for shorting physical stock.
Solely on inflation. Now it's got to worry about financial stability. Earlier this morning, Senator Elizabeth Warren, who's obviously been an outspoken person with regard to critiquing banks, joined Squawk on the Street and talked a little bit about how she views bank regulations going forward, and this is what she had to say.
Banking is about steady profits. Banks should absolutely be able to make profits. But when banks load up on risk, they put depositors at risk, they put small businesses at risk, and ultimately, as we have learned with these multi-billion-dollar banks, they put our whole economy at risk. So we got to make a change there.
Got to make a change there, she says. Ethan, I'm just going to follow up with you on that point.
They let me short it.
Is the banking system
they let me short it.
Stands right now a risk to the small businesses of this country and the economy of this country?
Fucking go.
I want to get into a fight with Elizabeth Warren here since I do work at a bank after all. You know, I mean, the banking system, I think.
Let's not be greedy, maybe, right? We'll wait if it pops some more. Try to close it out at. Oh, okay.
Lot of stress testing going on.
5. What do we got on the 15?
You know, what got
10 bucks.
California bank in trouble, Silicon Valley, was not taking a lot of
10.50.
credit. They had too many bonds in their portfolio.
10.50, easy.
So I think that
easy.
Generally speaking, the banking system's in
fucking go.
But I think that, you know, a month from now, we're going to be able to say that.
Like worst case scenario goes to 13 bucks. What's it gonna go to? $1 million? It's not gonna, like, it's fucking way up there already. Can I short some more?
And ultimately, the economy's gonna weather this storm.
Steve, we've got a break, so to speak, between now and May, when the next Fed interest rate policy meeting is going to happen. What exactly can happen in your mind between now and then to change the story, to change the narrative one way or the other?
Well, you know, the first thing is I think if that credit channel starts to show
5, I guess. This damn. This is actually moving rapidly. The 13 EMA. You got to be above the 13 EMA, or else you're not going to get it close. Because what you'll get is you'll get these wicks. You get these fucking wicks here. Oh, let me go back. So this is the candle body, and these are the wicks. You're just going to get, like, see how this. The body was 946 and the wick was 915. The wick touched, but the body was like nowhere near. It was 30 cents away. Meaning like almost nobody got filled there. So I think you're just going to get wicks. So I'm going to do like 1060. I'm not even going to be anywhere near that 1051. 1060. I mean, it's up 57%. Give me a break. Rumble is that's unfortunate. That's for sure. Went to 1040 and all the way back under 10 bucks. That's fucking pathetic. This thing was up 35% yesterday, and it's fucking up 5 right now. Like, that's tragic.
We've had zero bank failures, and that seems to me to be not necessarily the optimal.
Intel high of the day, pretty much. C refuses to quit. AI, same thing. That's, you know, you pull that on like on a 1 hour. That's a bull flag. Like, look at that. Three white knights red. Come back to 30, 70, 30, 31 maybe. 31. Tough to say on this one though. Very, very bullish.
Are we talking about rate cuts? If so, are they going to happen this year? Do they happen next year? What's your projection?
We certainly don't expect rate cuts this year. And I think Steve pointed out that it could really be idiosyncratic to SVB and
short side. Like, no one knows what the hell.
conference where Sheila Bair was speaking about it, just like that. You can let
Southern District Court of New York released a summary judgment decision. Okay, well, so what does that mean for it, though?
So we expect another rate hike, a pause after that, and we don't expect any cuts.
Can we get info, or is that too much to ask?
Really systemic happens to the economy, but that would be something of a risk scenario rather than a central case.
All right, Ethan Harris, Yelena Sholyatova.
2-week high, guys, was 11.20. It's above the 52-week high. 52-week high. 52-week low, $6. So someone said they've skimmed it, and it's a big win for them. A couple of lost, loose ends to be tied up. Damages between 6 to 8% interest will be charged on $200 million. $200 million. And what's the market cap? The market cap is 218.58 times $11. 11. I don't know. It's going rapid here. We'll just call it 11.11. The market cap is 2.4 billion. So that's like 10% added to their portfolio. But I mean, okay, they were $6. I could close here for a quick win. I don't really want to. That's not really much money. But I don't know. Say 15 minutes, because it's still in this mother candle. $11. There's the uncertainty of me not understanding what is happening on it, essentially. Maybe I'll do it like 11.02.
And unbelievably complex.
So we can get that. I'd like to do like 10.55, but I don't think I'm going to get that, so you never know. I'm liking the quick scalps today, frankly, on high RSI. I don't want to play shit to the upside, but I will play stuff to the downside. Rumble, man, what in the fuck? Honest to God, it's going to take forever to get my money back now. Brutal.
Got a nasty, confusing tax problem? Do what Eric did and call Optima right now for a free consultation. Call 800-901-3022. 800-901-3022. 800-901-3022.
It was like, what the hell was it a second ago? 10:39, and then it just went to like 10:58 out of nowhere. What's up with that? Clearly very bullish in this play, whoever's in this play. Big money, obviously. Because it's already up 55. And they're like not letting it come down.
You can't do anything. And that's why I love CopperFit hand relief compression gloves. The open finger design lets me type and text with complete freedom. And that gentle hug the compression gives my hands, what's not to love about that? But the non-slip grip in the palm.
It's like, I mean, it's 77 RSI. They're not letting it cool.
On the steering wheel, the phone, or whatever I'm trying to grip. CopperFit hand relief is a necessity.
But I mean,
and they're pretty cool looking, which makes
what do I talk about? There's only 30 of you in here. What do I talk about all the time? It's like clockwork. I'm telling you guys, this is the easiest pattern on planet Earth to fucking spot. 3 of these bitches, 1 of these. Like clockwork. And there's your proof.
Now on pace for a positive month with the Nasdaq poised to snap a 4-quarter losing streak. But according to CNBC's latest Delivering Alpha investor survey, which polls top institutional investors, strategists, and our own CNBC contributors, 68% of respondents fear the S&P 500.
Say this literally every time I say it. Doesn't mean it can't keep going up. But I will get this. It's just like, it's like built into the stock market or some shit. I don't know. Because it's all computers.
Quincy, it's always a pleasure to have you here and to bring those insights. I think the cliche goes, or the saying goes, markets climb the wall of worry. So should we be worried about a wall of worry, or should we be climbing it?
Well, the market certainly has been climbing it and doing a really good job in terms of price action, but you can't dismiss the fact that the market has to face, for example, operating margins being affected by higher wages. We heard that in the previous segment. With the revenue backdrop that is going to slow, even at the margin is going to slow. And then you also have at the same time, you've got an issue in the market where perhaps we see credit conditions tightening more, but the stress in terms of borrowing, the large cap names are not going to have any problems, but smaller businesses.
So if you haven't hit the like button already, the channel is so small, I'm sure it will matter for whatever reason.
First quarter earnings season is going to be very interesting in that we're going to pay very close attention to what they tell us in guidance.
He's shocked they had shares for short of this company.
Most important.
Very shocked.
Operating margins coming down at a pace in which they are going to be forced to lay off more workers. So far, it has been minimal. I mean, yeah, we've had tech layoffs.
Tough to say because they could just out of nowhere 3 more green candles could pop up, but
if that starts to happen in order for them to meet their bottom line, you're going to see the consumer slowing down, and that starts to add to that wall of worry. But so far,
that is just an incredible gap, though.
Still, the Treasury market,
775 to 10. Here comes more coming in. Big money doesn't want to let it this mother candle. They don't want it to come out of there. RIOT is now high of the day again.
And quarters now at this point. So those indicators in the market have been wrong up until this point. The economy has not fallen deeply into a recession, and a lot of those people who were calling for that are now
say it has. You're just in denial, buddy.
And maybe even saying that a soft landing
fucking
is possible.
reject.
That wasn't the narrative.
He's on the take.
Months ago. It is the narrative now. So what in your mind has changed?
What's changed is the resilience of the companies. I mean, every quarter that we've been in, almost the last year, you've had all of these expectations again that it's going to be dire. But it hasn't been stellar, but it certainly hasn't been
disappointed
dire.
about Rumble. In addition, just crushed everybody from just an incredible run up. They didn't
cost cutting has helped. The market has forgiven.
Dilution or anything.
So that's been what we've kind of muddled through. And yet
it's insane.
We've had some companies
nobody wanted to stay in the play, I guess.
The top line, the bottom line, and in terms of guidance, it has been actually pretty astounding, especially given the concern that we've had going into the various earnings seasons. The companies have actually gotten through. Call it a muddle through, but I'll take that over.
It's high of day, Intel Core.
All right, so Quincy, I want you to stick around right there because we're going to layer another part to this story here. This wall of worry is casting a shadow on stocks here in the U.S. And for the most part, should investors
still
be
short
looking
burr
to
here again?
Markets for some better returns. We've seen it; they've been outperforming.
But it's like 60 cents profit, really.
Don, this is the chart
not that much.
Investors have been focusing on the divergence in financial stocks here and overseas in Europe. This margin that we're seeing is the widest margin we've seen in years, despite the collapse of Credit Suisse and the ongoing concerns around Deutsche Bank. 60% of Europe's outperformance this year is being driven by financials and a stronger euro per data trek. And with Germany and France up about 14 to 15% so far this year, Citi analysts are saying that the run is overdone, downgrading Europe today to neutral from overweight, citing concerns around core inflation. However, remaining overweight on China, betting on a second half recovery. We did get some better than expected economic data from China this morning, also upgrading India. But back to China, news of Alibaba and JD.com breaking up. Their companies also lifting sentiment. Analysts writing that it could help regulators pinpoint their concerns to specific businesses. Both of these stocks, by the way, are on track for their best week since early January. Take a look at Alibaba up 18%. The events that could
drive been playing out well because, like, that's the difference right there between profit and loss. Just right there, and right back up. The fucking green bar didn't even stay, or the red bar didn't even stay. Look at 4 white knights now. All right, well, okay, I'll reshort that. That's fine. I will reshort that. You kidding me? Let's go 75 though. I don't want to get too greedy. I don't have any clue how high it's going, but it went higher than this. So 1150 is like the low now.
Taiwan's leader certainly is another wild card there, Seema. Thank you for that, Quincy. Let's take the global part of your title here.
Gave me some at 1175. I will look to close at
overseas markets do now
11-11,
overshadow
something like that.
or are taking a back seat to what's happening with the U.S.?
Well, you know, we've at LPL, we've been talking about developed markets looking very attractive for a number of reasons. One is particularly in Europe, and today we had a really good report in terms of inflation coming down, although we expect to see another rate hike from the European Central Bank. But it's moving in the positive direction for them. But the other aspect of it is that the European economies have gotten through the winter. Obviously, they were helped by a warmer climate. But they had the supplies came in, and also China has helped. It's interesting that if you looked at the charts, what you would see is that once it looked as if China was going to open, once they were going to get rid of the lockdowns, you started to see money going into the European markets. And why? Because they have very tight trading relations with China, more than so than the U.S., by the way. So that also helps. But overall, we look at the development.
So I could literally hold my short indefinitely. If it really gets away from me, I can just hold the short. It won't matter. I'll pay nothing, but I just won't have access to my money. AI's leveling off. Intel Corp still going up. What's CCL doing? Oh, it's red on the day all of a sudden. Wow. Okay. Interesting. Interesting.
And they are in the underpinning of the financial infrastructure. So we're paying attention to commercial real estate. We're paying attention to private equity, and also the venture capital. You know, that was so intrinsic for a Silicon Valley bank. That's not going away. The question is whether or not we can get through and not see a blow up, and maybe it'll just be a slow progression.
It's 67%. This is like I said this earlier. If I can't short it at the top, when can I short it? That's where you short it. That's why I shorted this. That's why I shorted, what the hell else? I shorted Mara. You know, you got to short it at the top. I don't want to ride it up. I don't know these companies. Does anyone know this? StockTwits. How many people are watching this on fucking StockTwits? What is this thing? Burr.
Comes at an interesting time when you look at valuations across the world, even with the outperformance of global and emerging markets. Europe is trading at a discount to the S&P 500, as are emerging markets. So how valuations play into this discussion around where stocks go in April and May, I think will be interesting. And then when on China specifically, looking to not just the economic data as to whether this recovery can be confirmed or if not, but when you have two major tech giants taking these very aggressive moves to restructure their businesses, how that could drive, not just sentiment, but there's been talk. Bloomberg is reporting that these two companies, as they split
Fibonacci retracement, right?
businesses, that those
Easy short, in my opinion.
public in Hong Kong, a number of companies separately have filed applications with Hong Kong Stock Exchange. So do we see this resurrection of Asia's IPO market? That will be key to watch.
All right. Quincy Crosby, Seema Modi, thank you ladies both very much. Have a nice weekend, guys. All right.
Psychologically, they want 12, obviously. But,
a winner-take-all affair, and that might not be good news for moviegoers. Will studios and theaters do anything to change that story, or is it full stream ahead? And as we head out to break, take a look at the Dow heat map with Intel leading the blue chips yet again. Those chip stocks continue to show some momentum here. Just a handful in the red right now. Travelers, Amgen, and Walgreens Boots Alliance with the Dow down today. The exchange is back after this.
Look, you did the tough thing during COVID. You paid your people and pulled your business through the pandemic. And now doing the tough thing could qualify you for up to $26,000 per employee at covidtaxrelief.org. Government funds are available to reward companies with 2 or more employees who stayed open during COVID. This is not a loan, and you don't have to pay it back. This program is complicated, but nobody knows more about it than the CPAs and tax experts at covidtaxrelief.org. You pay nothing up front. They do all the work and share a percentage of the cash they get you. Businesses of all types.
I could scalp another $20 here if I really want. I kind of want to go get food, so I almost literally want to do it because I'm fucking hungry. Maybe I will. So I can get some food.
$26,000.
Is it gonna dump on me?
Visit
Oh, 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 oh. It says I'm about to click that cover button.
Cards issued by Celtic Bank, member
Let's see.
Are you the decision maker in your company? Consider this. For the first time in decades, there's a better option for a corporate card and spend management platform. Meet Ramp, the only corporate card and spend management system designed to help you spend less
I
money.
just did a quick cover because I want to get some food.
Most corporate credit cards offer points as incentives,
Starving.
but those points amount to less than their worth in
So,
real
what did I
cash
even
value.
short that?
Ramp's business cards offer you cash back, real money in your pocket. Plus, you control
Where
who
did I
spends
short
what
that?
with each vendor. And Ramp software collects and verifies receipts automatically, which means you'll stop wasteful spending and close your books in hours instead of days. Businesses that use Ramp add up to 3.5% to their bottom line the first year. If you're a decision maker, adding Ramp could be one of the best decisions you've ever made. And now get $250 when you join Ramp for free. Just go to ramp.com/news.
Stop, $3.
Ramp.com/news. ramp.com/news.
Still profitable on it, but that was retarded. That was just a fucking waste of time. Let me do like, you know what I'm gonna do while I go get food? I'm gonna do like a 12.50 short on it. 12.45. Let's do, in case it takes off, I'll do like a 12.45. I'll open one at like 12.45 in case it rips while I go get food. And then, man, Rumble, what a joke. What a letdown. Jesus. What am I down on my shares on that thing? $131 on the shares. So the money I made on the puts, gone. Wow, that's brutal.
She was known to many as the Queen of Tejano music and became one of the
RC.
best-known Mexican-American entertainers of the late 20th century. Perez was shot and killed by the president of her fan club, Yolanda Saldivar, at a hotel in Texas.
38, 40, 30, 60 fucking cents. Man. I'm not going to be able to get my 8.6% next week, I don't think. Unless I'm swinging, and I don't want to swing. I just want to set it and forget it. Like, I don't want to swing. It's annoying. 5 1/3. 5%? Ugh. That's only $1,300. I mean, like, that's a good week. But that's a lot of risk for $1,300. Bank of America's coming down. Schwab is coming down. Wells Fargo down. Banks are starting to come down. SPY's starting to come down. Close the day out.
You'll hear every MLB game on your radio and your hometown announcers on the SXM app. And get expert analysis plus interviews with managers and players on MLB Network Radio. This is Aaron Boone, manager of the New York.
Hey, what's crypto? Crypto's just keeps going, hey? Crypto's still coming down from the high, though.
Testicular and neuroendocrine. Then you should call us immediately because you may be entitled to significant cash compensation. Call us at 800-408-1687. Our experienced attorneys will fight to get you the compensation you deserve. And you
This
pay
is a
nothing unless we get a recovery in your
5%.
favor. Time is limited to file the claim, so call us now at 800-408-1687. Operators are standing by 24/7, so don't wait. 800-408-1687.
Tesla calls.
800-408-1687. Again, 800-408-1687.
Salty made bank on this. Holy fuck.
Are the best reviews any company can get.
Jesus Christ.
Represents one.
I'm gonna buy AMC and
And this is how many Search Kings has. Search Kings has over 1,200 5-star Google reviews. No wonder Google hand-selected Search Kings as a Google Premier Partner. You want to stand out where your customers are online? Switch to Search Kings.
Welcome to SoFi's guided meditation for homebuyers. Mortgage loans are relaxed.
Next thing I need is some fucking AMC crybabies reporting my comment. Let me delete that. I know better.
More savings can be got if you refinance when rates drop. Visit SoFi.com StockWhisperer.com/relax to learn more. Mortgages through SoFi Bank and a member FDIC. NMLS 696891. Loan and offer terms, conditions, restrictions apply. Equal housing lender.
In my own Discord.
Welcome back to the exchange. The Treasury Department just out with new tax incentives for EV battery production, a market dominated by one country right now, and that's China. Phil LeBeau has the details and whether this could be the long-awaited boost to EV battery production here in America. Phil.
It will be, Dom. There's no doubt about that. The question is, how quickly will we see that production, not just of battery packs, battery cells, but battery components? How quickly will it ramp up? So here are the new EV tax incentives that go into effect on April 18th. Remember, the most you can get is $7,500 if it's built here in the U.S., but it comes down to the battery. If the 40% of the value of the critical minerals in that battery are processed or sourced in North America or free trade countries. If that happens,
Cool
then you
trading RSI, Salty. You got fucking trading RSI. You're doing insane. I might have to give you my money, and then you can just double me up. But you know, I'm serious about that.
Those battery components are coming from the U.S. or free trade countries. Then you will get another $37.50. And again, it ramps up to 100% by 2029. So what's the real implication in terms of how many people, or actually how many vehicles, that's really what we're talking about, will qualify for the full $7,500 or even $37.50? We're going to see a hit in the number of vehicles that can get that. And that
You don't need it, and it might cause you to lose money.
Maybe the next year and a half, because so many vehicles will not qualify. So much is sourced in China, still sourced in China, or processed
Strong.
in China.
Don't get suckered in over $100, and then you wind up losing 300 or some shit.
Though, when you look at somebody like Tesla, as you take a look at shares of Tesla, which, by the way, will report its deliveries for the first quarter over the weekend,
Like, is it even worth it? $100?
its cathode, which is the most valuable part of the battery cell, that comes from a supplier in Japan. So Tesla is likely to have at least $37.50 still applied to its vehicles. All of the automakers, Dom.
I'm laughing, but inside, not so much. This is a fucking shock. That's a shock. I mean, again, I had the covered calls, which I made a bunch of money on. But the shares, man, goddamn. And it's like, do I even want to average at this point? I don't feel like it. I don't want to buy another 100 shares for $970. Like, fuck that.
Best performing stock in the consumer discretionary sector in the first quarter. You have a buy on the stock. Do you see these new rules as the Treasury lays them out as a catalyst for Tesla and
I'm waiting to short it again at 12:45. Let's go. What do we have on Rumble for next week for cash secured puts? If I want to do some cash secured shit, like, look how bad it is. They're not even good either. It's falling, and they don't even pay anything. It's shit. So the calls are shit, and the puts are shit. It's just shit all around. It's not even good. Fucking brutal.
So through innovation and through constant cost cutting, Tesla has spurred market demand through price reductions. And so that's why they're the leader in this space. That's why we think they'll maintain to increase market share throughout the year. And as a matter of fact, we pulled some data.
All right, I got some food. There's like 20 people watching, so I might end this. Because you know when I go get food, I'm going to come back and be fucking 10 people. So, I mean, you're all Discord fam anyways. I'm pretty positive. I haven't seen anyone say, hey, how do I sign up or any of that shit. YouTube is definitely not promoting me because I have no subscribers. So, but I don't care. I'm not gonna do it on the free from it all stream. I don't think I might do like 2 or 3 days on this and then like 2 days on free from it all, because I noticed I did one video and it got a fuckload more views on free from it all. So I might unfortunately have to. I'm sick and tired of giving them the free content on that channel. It's fucking annoying. So where is it like this? I can build this channel.
Is that a spur of demand because of these tax credits, or do they largely not factor into the global story for many of these makers?
No, I think they matter a lot. They obviously matter for Tesla too, but less so because Tesla's been able to bring down their prices, and they haven't had the benefit of the $7,500 for
for a couple years at least. But to
Often.
answer your question directly, these tax credits are important. I think what the government is trying to do is balance spurring the
Not
demand for
often,
electric
man.
vehicles while at the
Trading.
same time compelling companies to bring back production of batteries, cells, and components to the United States. So they are important. Today's guidance was expected.
So I mean, Webull only shows one exchange though. I don't know why.
Which countries we can't
Oh,
use
fuck.
in terms of being able to use the EV tax credit. But at the end of the day, the government is trying to create a balance between spurring EV demand and also compelling companies to bring back production to the United States.
No, Phil, you mentioned in your story, you seem fairly certain that this tax credit new information is going to change the production environment in America for EV batteries and everything else. I wonder if you take a look at the stories you've laid out, take a look at the Fiskars or the Lucids or the Rivians. I'm seeing a lot more of on the road near where I live these days. How exactly then does the U.S. EV adoption picture now change? And as Tesla, we know, is going to be a beneficiary, how much does it trickle down to some of the smaller makers that are not Tesla?
Well, each of them have unique situations. When you're looking at Fisker, it's an asset-light approach. So it comes down to, as they ramp up their production, look, the first ones that are being built for Fisker are coming out of Europe. They're not going to qualify for any of these EV tax incentives. But then when they build their subsequent models in Northeast Ohio, theoretically, they will qualify depending on how they source the battery cells there. With Lucid, you're looking at vehicles that are above the price range. So can they bring down the prices to the point where they then qualify? And then when you're talking about Rivian, some of the Rivian models still qualify, others do not. And this comes down to lowering the price on those vehicles. Overall, Dom, I would say this about these EV tax incentives. They are designed to push the industry to do more manufacturing of battery cells, battery packs, and EVs overall here in the United States. And I think everybody agrees that will happen. It's already happening with the announced plants that are going to be going into operation over the next several years. It's just going to take some time to see that filter through. And in the meantime, over the next year, year and a half, the number of vehicles that qualify for EV tax incentives, whether it's $3,750 or $7,500, it might be a little bit constrained, if you will, but it is expected to ramp up. At least that's the hope of the Biden administration over the, once you get past this year and into next year.
Onshoring efforts for one of the key growth industries of the next 20 to 50 years, arguably. Phil LeBeau, George Gianrikas, thank you both very much. Have a nice weekend, guys.
Thanks, you too, Dom.
All right, still ahead on the show, a new development in the Norfolk Southern Ohio train derailment story. We have the details straight ahead. The stock is down more than 14% just so far this quarter. We're back after this.
Eric's IRS troubles were nasty.
I had 10 years of unpaid tax returns. I owed $83,000. I started getting letters.
And unbelievably complex.
Things that are written in the tax code are so complicated that if you don't pay a tax professional to do your taxes, you're going to screw up. This was such a complex problem, I did not think anybody could solve it.
Eric's whole life was about to go down the drain, so he called Optima Tax Relief.
Optima was able to make sense out of a huge disaster, and Optima stopped it.
To say the least, Eric was very relieved.
They got me out of hot water, that's for sure. Optima saved me a boatload of money and got me out of a horribly complex situation. It's a huge relief and a huge weight lifted off my shoulders.
Got a nasty, confusing tax problem? Do what Eric did and call Optima right now for a free consultation. Call 800-901-3022. 800-901-3022. 800-901-3022. Optima Tax Relief. Testimonial from an actual client. Some restrictions apply. For complete details, please visit OptimaTaxRelief.com.
Hi, Gwyneth Paltrow here. We do everything with our hands. We type, text, chop, mix, cook, open jars, play music, drive places, day in and day out, every single day. So when our hands hurt, we can't do anything. And that's why I love CopperFit hand relief compression gloves. The open finger design lets me type and text with complete freedom. And that gentle hug the compression gives my hands, what's not to love about that? But the non-slip grip in the palm, that's pure gold. That lets me keep a firm hold on the steering wheel, the phone, or whatever I'm trying to grip. CopperFit hand relief is a necessity for me, and they're pretty cool looking, which makes wearing them even better. CopperFit hand relief. Give them a try. You'll love them.
Get yours today for only $19.99 at CVS,
Rite Aid, Walgreens, Target, or Walmart. Or go to copperfitusa.com. Individual results vary and results are not typical. For more information, visit copperfitusa.com.
Now is the time for a Wings and Rings franchise. The sports restaurant and bar concept where everyone's a VIP with no franchise fee and no royalties for the first 6 months of operation. With new locations growing across the U.S. and around the world, now's the time. To learn more about our Wings and Rings Development Incentive Program, our new prototype restaurant design, and more, please visit ownwingsandrings.com. That's ownwingsandrings.com.
This is not an offer to sell a franchise. Franchise offerings are made through the franchise disclosure document. Ask for details.
SiriusXM has something for your whole family. Kids Place Live plays today's pop hits along with stories and fun just for kids.
And escape into the golden age of radio with Radio Classics.
And keep everyone healthy with advice with the top doctors in the world with Dr. Radio.
Welcome back to The Exchange. Check out shares of Norfolk Southern, up 1.5% in today's session so far, now up about 1%. But this is all despite the DOJ filing a lawsuit against the company today over the Ohio train derailment, East Palestine. Morgan Brennan is here with the latest on that story. Morgan, this has been an overhang for Norfolk Southern and arguably the entire rail industry for a while. What exactly is the latest here now?
Yeah, so this is the next step in this evolving situation. The DOJ is suing Norfolk Southern for the February train derailment in East Palestine that resulted in the release of toxic chemicals, seeking damages for alleged Clean Water Act violations. It says in the 28-page complaint, quote, Plaintiff, United States of America, asks this court to hold defendants accountable for unlawfully polluting the nation's waterways and to ensure it pays the full cost of the environmental cleanup. This is important to note. This is a civil suit. This is not a criminal suit. But based on conversations I've had with industry experts, this action still seems to be a rare one by the federal government in the wake of a derailment, even a high-profile derailment such as this. Norfolk Southern responding, quote, our job right now is to make progress every day cleaning up the site, assisting residents whose lives have been impacted by the derailment, and investing in the future of East Palestine and the surrounding areas. We are working with urgency at the direction of the U.S. EPA and making daily progress, stressing commitment to, quote, make it right. Now, this is something CEO Alan Shaw has been saying repeatedly as well, this notion of making it right. He said so in my interview with him on site last month, as well as during testimony in 2 recent congressional hearings. So far, more than 9.4 million gallons of impacted water, nearly 13,000 tons of waste soil have been removed for proper disposal, and financial commitment by the railroad to the community and region has totaled $28 million and counting. Norfolk is also facing a lawsuit from the state of Ohio, a flurry of class action lawsuits. Shares of Norfolk Southern, Dom, as you mentioned, are actually trading higher today, but since the start of the year, they're down 14%, and actually, since this February 3rd derailment, they're down about 17, almost 18%.
I guess maybe the point of all this, Morgan, is Americans want to know if this is going to change behavior. Are trains and rail operators going to be safer going forward because of these kinds of actions?
I mean, that is always the hope. And I don't think there's ever a situation in which a freight railroad, Norfolk Southern or otherwise, is, derailment is not good for anybody. Accidents are not good for anybody. And actually, if you look at the data historically, the data has been showing more safety, a better safety record. That being said, in the wake of this accident, you do have a very bipartisan push now for more rail safety regulations. You had a bill that was proposed a couple of weeks ago. That was something that was very much in focus when the CEO of Norfolk Southern testified before the Commerce Committee earlier this month, which is the lawmakers that actually regulate the railroads. And certainly the industry itself has been starting to take steps and take actions to try and move past this and learn from the lessons of the situation, which, by the way, investigation still ongoing in terms of all the details and all the things that went wrong for this to actually transpire in the first place.
All right, Morgan Brennan with the latest there on the Norfolk Southern saga. Thank you very much. Still ahead on the show, what's behind the box office blues? The answer could be behind this curtain. It's virtual, but we're going to reveal it. Pull back the curtain, show you what's behind it after this break. Keep it right here.
SiriusXM is the home for the best in podcasts, like Mea Culpa with Michael Cohen.
I talk to the most brilliant, political, and controversial minds in the world. It's Alan Dershowitz, Andrew Yang, the one and only Henry Winkler, Nicole Wallace, Ellie Honig, the notorious Cenk Uygur. And we dig
into the dark underbelly of American politics. This man is still creating chaos that will ultimately dictate the fate of his entire party.
Mea Culpa with Michael Cohen is available now on the SXM app, included with all trials and popular plans.
Look, you did the tough thing during COVID. You paid your people and pulled your business through the pandemic. And now doing the tough thing could qualify you for up to $26,000 per employee at covidtaxrelief.org. Government funds are available to reward companies with 2 or more employees who stayed open during COVID. This is not a loan, and you don't have to pay it back. This program is complicated, but nobody knows more about it than the CPAs and tax experts at covidtaxrelief.org. You pay nothing up front. They do all the work and share a percentage of the cash they get you. Businesses of all types, including nonprofits and churches, can qualify, including those who took PPP loans, even if you had increases in sales. You did the tough thing for your employees during COVID. Let covidtaxrelief.org help you get up to $26,000 per employee. Visit covidtaxrelief.org. That's covidtaxrelief.org. covidtaxrelief.org. Cards issued by Celtic Bank, member FDIC.
Are you the decision maker in your company? Consider this. For the first time in decades, there's a better option for a corporate card and spend management platform. Meet Ramp, the only corporate card and spend management system designed to help you spend less money so you can make more. Most corporate credit cards offer points as incentives, but those points amount to less than their worth in real cash value. Now get $250 when you join Ramp for free. Just go to ramp.com/news. Ramp.com/news. ramp.com/news.
This is where capitalism was created in our country. Bringing mad money to the New York Stock Exchange is like bringing it home, and I can't wait to bring it to you.
Mad Money at the NYSE, weeknight, 6 Eastern, CNBC.
Welcome back to the exchange. We have a slew of topics to focus on in the streaming and box office front today. Next week marks the anniversary of Warner Media and Discovery merging to form Warner Brothers Discovery. There's the curtain pulling back there. That stock is by far the best performer in the first quarter, up almost 60%. Netflix is up 15%, and Disney is up about 14%. Now, speaking of Netflix, 2 of its top film executives reportedly leaving the company amid its restructuring plan, and the box office still front and center for investors, with the number of wide-release films down by over 60% since 2019, pre-pandemic. So here to break it all down for us is Doug Kreutz, Cowen analyst, Daniel Loria, Senior Vice President of Content Strategy at Box Office Pro, and our own very own Sarah Whitten, CNBC.com entertainment and media reporter as well. Thank all of you for being here right now. I guess, Doug, we'll start with you. Macro-wise, is this a scenario where we can say that the box office is getting healthier, or do we still have secular headwinds and the paradigm change is going to last pretty much for decades to come based upon what we've done at home over the last 3 years?
Well, it's certainly gotten better relative to where it was in 2020, 2021. We're just now getting back to what looks like a kind of a full theatrical release schedule. Last year, the major studios released a little over 70 films. That was down from over 100 pre-pandemic. This year, it looks like we're going to get a little bit over 90, and most of that remaining gap is due to the fact that Fox isn't making as many films after being acquired by Disney. Last year, box office per wide release film was down around 10% from pre-pandemic, which doesn't sound so bad. But it's not clear to us that with the output scaling up this year, you're going to see box office scale up with it. And that's going to be potentially an issue for the studios who have films that don't perform well. As we've seen a few films this quarter, Ant-Man and Shazam not do well.
All right, so Dan, this is interesting because from my perspective, I love going to movies. I only really go to them when they're blockbusters, though, right? I can wait for some of the dramas and rom-coms and watch them at home when they hit HBO or something else. But I would go watch Marvel movies, right? I'd go watch big NBC Universal flicks that had a lot of special effects, that sort of thing. I haven't seen as many of those as I can recall feeling like I've seen pre-pandemic. Are we, in fact, in a situation where blockbusters are not there as much as we have seen in the past?
Well, I think the big tentpole blockbusters are still performing post-pandemic. If we look at titles like Top Gun Maverick, like Spider-Man No Way Home, even like Avatar, The Way of Water, these three films are some of the highest grossing films globally of all time. And these all three films were released after the pandemic. So if we're talking about individual tentpoles, the big blockbuster movies, yes, they're still coming out there. They're still being global events. I think part of the discussion right now that we're trying to figure out is what happens between those tentpoles, right? What is going to happen within those periods where the market doesn't have a big blockbuster spectacle? And that's the big question that Hollywood is trying to answer.
Sarah, I wonder, from a reporter standpoint, are there studios or entertainment companies that are generating more buzz in your world, the ones that are kind of drawing you into coverage more? And what companies are those?
Absolutely. I mean, as you mentioned, Marvel, that's going to be Disney. And then you also have Warner Brothers, which has the DC franchises, and Universal, which is our parent company that is going to have Fast 10 this year. So those are kind of the main three. And then you have Paramount coming out with Dungeons and Dragons, which came out with Top Gun last year. So those are kind of the main ones we've been watching. But some of the smaller studios are also putting out a lot of product, which is really important as well. Not every movie needs to make $100 million at the box office. It's very cumulative. So things like A Man Called Otto, Cocaine Bear, 80 for Brady, Megan, it's all adding up. And we just need more titles to get more ticket sales.
And that seems like that's that between the tent poles thing. So Daniel, we've got a few moments left here. What entertainment company has you most excited about 2023?
I think Paramount is probably the most interesting company going into this year after the great success that they had last year, balancing their streaming strategy with Paramount Plus with a theatrical first strategy with Top Gun. That's happening again this year with the next Mission Impossible film. And we've seen it with movies that, as Sarah said, they don't need to make $100 million, but might. Scream 6 earlier this quarter. That performed. It's going to be one of the best performers in that franchise. Dungeons and Dragons this weekend isn't going to be a home run, but sometimes you only need a double or a triple, Dom.
All right. So, Doug, we'll give you the last word here. You're the analyst that covers many of these companies. Top pick, most exciting name for you?
Warner. I think that, they have a turnaround underway from the Warner asset being, indifferently managed by AT&T for 3 years. I think Warner Brothers Discovery Management has a really good plan going forward, both from a financial perspective and a strategy perspective. I really like the hire of GSUN into run DC. I think that was a sort of an out-of-the-box thinking move by them that could pay dividends.
All right. Top calls there. Doug Kreutz, Daniel Loria, Sarah Whitten, thank you all for our Entertainment Roundtable. Have a nice weekend to all. All right, well, that does it for us here on The Exchange, but don't go anywhere because Tyler and Contessa, are they on the cam? They're getting ready for Power Lunch. You see them right there. Can they wave? They're waving to me. That's straight ahead. Keep it right here. We'll see you on Monday. Kelly's back. Have a nice weekend.
Ad paid for by OpenShar Concepts. Attention firefighters, members of the military, and airport workers. For decades, first responders and firefighters at military bases and airports used a chemical-based foam to fight fires. Studies have shown that chemicals used to make aqueous film-forming foam, or AFFF, are highly toxic to humans and have been associated with several types of cancer. If you or someone you know was exposed to AFFF and were diagnosed with any of these cancers, including kidney, bladder, prostate, pancreatic, lymphoma, leukemia, testicular, and neuroendocrine, then you should call us immediately because you may be entitled to significant cash compensation. Call us at 800-408-1687. Our experienced attorneys will fight to get you the compensation you deserve, and you pay nothing unless we get a recovery in your favor. Time is limited to file a claim, so call us now at 800-408-1687. Operators are standing by 24/7, so don't wait. 800-408-1687. That's 800-408-1687. Again, 800-408-1687.
Dirty patio? Don't scrub it. Wet it and forget it. Wet and Forget, the easy outdoor cleaner. Wet and Forget works overtime with Mother Nature to eliminate unsightly black and green stains on your patio or deck with no scrubbing, power washing, or bleach. Use Wet and Forget on all your outdoor surfaces, including driveways, siding, roofs, and fencing. Wet and Forget's available in a concentrate or extreme reach hose end. Purchase Wet and Forget in-store or online at Lowe's, Menards, or Ace.
Get the CNBC app for breaking news, real-time market data, custom watch lists, and watch CNBC live.
Good morning, everybody. Welcome to Squawk Box.
And get your favorite shows on demand.
It's going to be my standard.
The CNBC app. Download it today.
Adding this. Call
United Healthcare about an AARP Medicare supplement plan.
Hello, everybody, and welcome to Power Lunch. Alongside Contessa Brewer, I'm Tyler Mathis. And coming up, market turmoil plus the rising bond yields have some people willing to sit on the sidelines and take steady returns in treasuries. Are those people going to be sorry later? We've got what we're calling a bullfight coming up. Stocks versus bonds. We'll hear bulls on both sides.
Plus, Richard Branson's Virgin Orbit cutting nearly all its workers, ceasing operations for the foreseeable future. The latest black eye for the once red-hot space. We'll get to all of that. First, let's check on the markets now. Finishing up the week with gains, and there you're seeing green across the boards. The Dow Industrials up 0.75%, S&P 500 up nearly 1%. You've got the NASDAQ at 1.2% higher on the day so far, and the Russell 2000 up 1.33%. Let's get right to Christina Partsenevelis for a look at the day's biggest movers. Hi, Christina.
Hi, that's why I'm wearing my green today. But the first quarter is coming to a close, like you mentioned. The NASDAQ is the clear winner, over 15% higher, snapping its longest losing streak since 2001, the year the first Harry Potter movie came out. The S&P up 6%, heading for a straight second quarter, positive quarter, I should say. And only the Dow is expected to end flat for this quarter. Semiconductors, though, making some news today with Chinese regulators announcing they will review Micron chips for security risk. Micron shares, you can see, are 3% lower, but still up about 22% this quarter. Sounds like good news, but still trailing the Van Eck Semiconductor SMH ETF, which is a great barometer for the chip sector. And by the way, the much beaten down Intel, still the best performer in the S&P 500 this month and on pace for its best month also since 2001. And investors seem to really like the new 2024 product launch timeline. Tesla, leading the consumer discretionary sector higher today. Investors are buying into the name ahead of its Q1 delivery and production numbers that are expected this weekend. The recent price cuts are expected to help. And lastly, shares of General Electric trending about a 1% higher after settling patent disputes in the U.S. and Europe with Siemens Gamesa and getting a price target upgrade to $110 by Morgan Stanley. Shares are about $95 right now. Guys?
Christina, thank you very much. Well, as we close out the first quarter of the year, the word of the year so far has been volatility. The Fed's interest rate hiking campaign has sent equities scrambling while yields have gone haywire following the fallout from the banking system stress and mess. But what is the better investment now? It's time for a good old-fashioned bullfight between stocks and bonds. On one side, we have equities largely outperforming this year, with the S&P up more than 6% and the NASDAQ 16% higher. Best quarterly performance for that one in over 2 years. On the other side, yields have come down from their highs and are lower than where they started the year, but are still sitting at levels not seen in quite some time, with a 6-month T-bill paying nearly 5%, down from where it was, but a nice return nonetheless. So where should you put your money now? Here on the equities bull side is Mike Binger, Gradient Investment President. And on the fixed income bull side, Maria Schrin, Circle Wealth Management Managing Partner. Maria, let me begin with you and clarify something here, because I don't want to suggest that by calling you the bull for bonds, that means you are a bear on equities and think people should be selling equities and moving into bonds. Have I got that right?
Absolutely. I do not think that being a bond bull means being a bear for equities. I think this is one of those periods where we can go back to the old-fashioned asset allocation and have both asset classes, because both have merits at this point.
But what you do say is if you have incremental money to put to work right now, given where yields are on bonds and a particular point in the maturity spectrum, we'll get to that in a minute, where bonds are now and where stocks are now, that the incremental return you would earn from stocks may not be worth the increment to risk versus bonds. Have I got that right?
Absolutely. All we have to look is, after the rally that we've had this year, where valuations and the equity risk premium are. Stocks, whether it's large cap, are trading above their 30-year historical average PEs of 16 times. We're right now at 18 times. Small caps are almost 23 times. And the equity risk premium is at the lowest we've seen for a long time at 2%, where typically it's 3.5%. So it's very hard to make the case that new money should be going into equities at this point.
Where on the maturity curve would you be emphasizing investments, and would you be going for high quality versus high yield? Would you be going for munis if it isn't a taxable account that you're looking at?
Yeah, we like the shorter to intermediate part of the curve because you can get actually higher returns than longer bonds, or 80 to 90% of the return of longer bonds in the 2 to 4 year intermediate maturities. We also like higher quality bonds. They are a safe haven. We think that they're a better place to ride out the uncertainties that we're seeing, as opposed to higher yielding credits, where the credit crunch resulting from the banking stresses that we've seen over the past few weeks have not been fully known and have not been fully developed. And so we prefer high grade bonds at this point.
Okay, so Mike, bring it in for us. Lay out your bull case for stocks right here and why we should be feeling confident putting our money where the equities are.
All right, I got a bunch of reasons. I think that we're in the ninth inning, if not the bottom of the ninth, of the Fed increasing interest rates. I feel once that's done, that should ease the strain on the banking system. I also think that, that inflation is going to trend lower and probably exit 2023 in the 4% area. And, I'm not as much of a bear on corporate earnings as a lot of people are. I actually think we're going to find that, corporate America has got very expense conscious right now, and that's going to keep earnings at an elevated level. And as we look out to 2024, I think earnings stand a good chance of growing 10% plus. So you put this good stew together, and I think you have a market that will pivot in September, start looking into 2024, and you have an economy that's growing. You have corporate earnings growth of 10% plus, and you got stock valuations that, they're not bargain basement, but they're not bad right now. So you say you put an 18 multiple on $250 or $260 in corporate earnings. That's how you get to that 4,600 on the S&P 500.
There is a lot of uncertainty right now. I think that you're hearing people feeling nervous about what's coming down the pike, more broadly about whether recession is still in the picture, what's happening with the banks, what's happening with this rolling credit crisis, and what toll that might take on the markets right here. With all of those factors considered in, and you're right, the companies are showing some intense efforts on efficiency, which are being applauded by investors, but that means people lose their jobs and there are opportunities that go down. Given that, given all the uncertainty, are there names that you particularly like where stocks or investments are concerned?
Yeah, I really like U.S. Bank right here. This is a top 5 bank. With all this turmoil, their deposit base has actually grown. They're right here in the Midwest. We're in Minneapolis. They're in Minneapolis. They're a conservative bank. They're diversified. They're deposit based. When you can get a bank like that at a 6 or 7 multiple, I think that's a good one to go on. The second name I like a lot is Google down here. Google they're still dominant in search. YouTube is still dominant in video. People are getting way too carried away in this pullback over ChatGPT versus Google Bard. That's so far down the road as far as revenue generation and part of the business model. I think it's a good opportunity to get into Google right now, a dominant secular growth name.
All right, guys. Thanks for the argument there. It really wasn't an argument. There was widespread genial agreement, I guess. Basically, Mike Binger and Maria Schrin. Thank you very much. We appreciate it.
Thank you.
While tech is keeping the stock bulls raging, not every group is living their best lives. Retail is struggling here, trying to regain some footing, with nearly every discretionary category weakening, except for one, beauty. Melissa Repko is here to talk a little bit about this. What are you seeing when it comes to spending on this category?
So Contessa, discretionary merchandise is really pressured across the board, both in terms of sales and also in terms of units. So we've heard that discretionary is down about 5% in both those categories, dollars and units. But beauty has stood out as the bright spot. And along with groceries, that's what retailers are using to drive people into stores.
We've seen a lot of retail look at high-end strength, the luxury market holding up, and really starting to see weakness in that lower end categories. What's the case in beauty? Is it the same?
So I spoke to Ulta CEO Dave Kimball earlier this week, and he was saying that there's a couple of different dynamics that are helping beauty. One is that it's an affordable luxury. It's like a little thing that you can get. Some people call it the lipstick index, that as the economy goes down, often lipstick sales, beauty sales go up. So that's one factor he mentioned. But he also spoke about how it's a routine people got into during the pandemic. So they got used to a different skincare routine, a little pampering of themselves, and also connecting beauty to wellness and health. So he says that's also making it more resilient and sticky, even as people pull back in other areas.
Is beauty tied to the level of tax refunds?
Tax refunds are a factor here, but again, beauty seems to be holding up. But we are seeing tax refunds under pressure, and that's really bad news for,
lower
again,
this year than in prior years.
Yes, actually, on average, tax refunds are trending around $400 less per person, according to Wolf Research. So if you think about $400 and you multiply that across people, that adds up pretty quickly. That could be...
That's a lot of lipstick.
It could be a lot of lipstick. It could also be a flat screen TV or some of those bigger ticket items people may have a harder time justifying until they get that surprise check in the mail, or in their bank account. So that is another factor here. But again, beauty is a smaller price point, so that could help.
Ulta the hot name here?
Ulta is.
So we're at 1095. So that's what I said there, folks. Should have just held that instead of closing at 1163. I should have closed it at 1111, like I said. Make that extra cash. Should I shut this down? It looks like we have 14 people left. Should I stick around for power?
Yes, exactly. That's a very good point, and that's something that cuts across both.
Let's see here. I'm surprised actually the people in Discord aren't in here.
No, we have across the board price points.
Rating right now?
Some of the brands
Go
you
on
might see
here.
at a drugstore. They have some of the brands you might see at a luxury retailer like a Bloomingdale's. So he said they are, hedging their bets that way. And with Elf, for example, I spoke to their CFO, and she said they are actually gaining.
If I leave, I lose more than half the people.
Who are looking
11.
to save on those beauty items too.
I'm curious what you see in terms of trends here, because when we were talking about the return to the office, there was this expectation that everybody would go out and buy new work clothes, maybe to fit changing bodies from the pandemic weight gain or loss, and maybe a decline in athleisure, for instance, Lululemon. Okay. If you apply that to beauty, the one thing that strikes me is that we all got used to these Zoom calls where you're
Tesla's up at the 1,300%. Jesus Christ.
You look at the mirror in the morning before you leave, and then that's it. If you're on a Zoom, you're seeing yourself as you really are. And whether that's carryover, if that's the carryover now for beauty.
I think that's a really fair point, and I think that is part of the reason why it's sticky too, because
So
it's one small thing you can do to make a difference. Maybe you can't afford that blouse, but you can afford to upgrade your makeup just a little bit, to put on that extra eyeliner, or do something to make yourself pop and feel good. Even if you
Holy
can't
shit, and Riot especially.
Is the beauty
Jesus.
going to help lift the Macy's, the Bloomingdale's?
You see those numbers change just like that?
But really,
There was the 10 strike didn't even have anything. It was 4 cents. Now it's 13 cents.
going to devote more aisle space in about 300 stores this year to beauty.
Wow.
And it's going to be having more things like that front and center, everything from lip gloss to bath bombs. So really we're seeing both the low and the high price point retailers lean in because they know people are still buying these products.
I feel like this
That's
was
a 1 hour. Let me get the hourly.
I really enjoyed the makeup chat.
Hourly. Here we go.
Blending. I like the
4 straight hours of going down. Yet.
Alrighty, coming up, breakups and shakeups. JD.com follows Alibaba in splitting itself up. Richard Branson's Virgin Orbit shutting down, basically. And 3 Cano Health Board members resign, but they don't leave quietly. We'll have all the corporate drama ahead on Power Lunch.
Jason, I know how to get you out of here. I'm gonna put on some Joe Biden. I'm gonna put Joe Biden on loop. Who wants to watch some Joe Biden footage, guys?
WrestleMania 39. Then tomorrow at 3, join us for the Busted Open WrestleMania party at the iconic Whiskey A Go Go on the Sunset Strip with tons of special guests on SiriusXM Fight Nation.
Cody Rhodes gonna finally win. I hope so.
IRS is the most
He's gonna cry like such a baby if he wins too. Like no jokes, and it's gonna be real. It's gonna be raw, as they call it. Raw.
Further rate hikes are expected. Most people don't know it, but the IRS adds interest charges to your tax debts daily. So if you owe the IRS today, you'll owe even more tomorrow. And it doesn't stop until you get right with the IRS. The good news is getting right can start with one phone call to Optima Tax Relief, America's #1 tax relief firm. Optima's tax professionals specialize in the Fresh Start Initiative, a powerful IRS program that can save you thousands if you qualify. In fact, the experts at Optima have resolved over $1 billion in tax debt for their clients. Call now for a free consultation.
Call 800-901-3022. 800-901-3022. 800-901-3022.
Zero tips on expecting to wake up and a bunch of people were real green. I thought would have seen something from that today. That's unfortunate. Can't believe it fell below 200 EMA. What the fuck? How is that even possible? 144% daily active user growth year over year. So the whole year they've gained 144% year over year growth. Fucking stock is below 200 EMA. What?
Johnson's telecom-based products. Don't wait another day to see if you're eligible. Call us at 800-726-2809. That's 800-726-2809. Our network of attorneys are ready to fight for you, and you'll pay nothing unless there's a recovery in your favor. Time restrictions may apply. So call now. 800-726-2809. That's 800-726-2809. Again, 800-726-2809.
Yeah. Time for today's sign up. 200 names.
Let's bring in Deirdre Boza for more on this trend. Deirdre, is this just coincidence?
What the shit?
Well, Chinese big tech, it's not that dissimilar to our own big tech. These are sprawling empires with many different businesses under one umbrella that have gained huge influence over different swaths of the economy and have collected a ton of data along the way. No, this is not a coincidence, because if this is the new playbook for Chinese mega cap tech, spin-offs, etc., JD.com and Alibaba, they may only be the start. JD.com is the second public Chinese tech company in a week to announce that it's breaking up its sprawling businesses by targeting Hong Kong IPOs for property and industrials units. Alibaba was just a few days ago. It said it would split itself into 6 different independently run companies that could seek separate IPOs. So who else could follow? Well, the biggest names in Chinese tech, if they so wanted to, or if Beijing so wanted them to. Take Tencent. Let's take a look at its businesses. It pioneered the super app model with WeChat, or Weixin as it's known there, but it also has games, advertising, fintech, cloud, media. It's also been one of the most active startup investors over the past years, taking stakes even in American companies as well, like Fortnite maker Epic Games. Let's take a look at a few others. Baidu, known to many as the Google of China, but it's evolved over the years. In addition to search, it has AI, autonomous driving, and cloud. So you could see this being a company ripe for this kind of model. There's also Pinduoduo, Chinese e-commerce darling. It is pushing abroad with Temu. You might have seen those commercials during the Super Bowl, and also expanding its logistics footprints like some of its other e-commerce siblings in the space. Others from Meituan to ByteDance, they could follow the spin-off model as well, potentially
Like we can't even buy that, I don't think.
in terms of new IPOs. But as always,
Oh, can. It's pink sheets though. Fuck that shit. Yeah, I thought so. I remembered something was up with that. I was like, yeah, no, don't worry about that.
Totally derailed Ant Group's IPO, which really kicked off that whole regulatory crackdown. And even if it looks like it's easing up on Chinese companies, maybe there's a foreign shoe to drop, right? We saw what happened with Micron today.
So, Deirdre, what does the Chinese government stand to benefit by forcing the split-ups, if it's the government behind this?
Well, they can say, look at what we're doing for the private sector. They are unfettered. They can go create billions of dollars in value through IPOs. They can operate independently. But there's another side of this. They also benefit in that they reduce the influence and the data, particularly important, the data.
Still falling by the looks of it. This thing's giving it all up. Still probably an easy short, actually, from here. You know, it should head back to VWAP after something like this. So maybe I will re-enter this as a short. You know, what did I close? I closed it at 1163. Fuck. Could re-enter this and just try to irk out 75 cents a share more. I don't know if that's worth it though. Probably not. Right? I don't know. Schwab falling into close, guys. Banks falling into close. Not looking good for Schwab. Bank of America is holding. Wells Fargo red. Barely green. Barely green. Schwab has had a very bad fucking week. That was a big miss on the week. Absolutely. We go back 5 days pretty much. This is 1, 2, 3, 4. This is like 5 days. Schwab has had a fucking terrible week. Falling again.
Password sharing. Sorry, Mom. Plus, the political toll on TikTok, the controversial social media platform, along with its parents, spending more than $13 million on lobbying.
Season pressure on Bank of America and whatnot. Let's see what is Walmart? Is it still up or did it kind of chill out? That's still up a little bit, eh? Walmart holding. Oh, this is like one of my permable stocks. Costco, Walmart, Amazon, Google.
Honestly, it was an ideal match. That's exciting. You deserve somebody who will finally treat you right. Details. What's his name? Select Blinds. Wait, what? SelectBlinds.com made shopping for custom blinds and shades so easy. Their customer service was
so many commercials though. Fuck.
While also giving me ideas I hadn't even thought of before. Like Amazon and Google Automation.
Oh, no.
With their huge selection of colors and styles, I found my perfect match in no time. It's no wonder they're the highest rated blinds company in America. Wow, I guess I need to check them out. You definitely should. Just go to selectblinds.com. You won't regret it. I know I don't. Selectblinds.com. The perfect match.
I'm Steve Booth, President and CEO of Baird. For over 100 years, Baird has provided individuals, families, businesses, and institutions trusted financial advice and the peace of mind that comes with a financial partner who always puts their interess first. With Baird, you'll experience a different type of financial partnership. Baird is privately held and employee-owned, which frees us to focus on your needs, taking the long-term view, continually reinvesting in our capabilities and technology to best serve you. Our structure also means Baird's extraordinary
6% on Tesla in a single day. I feel like it has to come down on that. Like I just feel like that's, you know, you go one day, 2 day, 3 day, 4 day. It's up from 187 in 4 days, and it's way above those trend lines. 83 RSI. That's like an easy short at that point. But the puts are where it's risky. Because this is the 1 year, 1 day. The 1 year, 1 day, it's down, right? It's trying to get to up and over 200 EMA, which is 209.22. Which fell, rises, probably will fall. Like it'll keep that pattern going, right? And it crossed.
SiriusXM is home to the best in podcasts, including Baseball Overcast. I'm Jake Mintz. He's Jordan Schusterman.
Continues up, right? So it'll do like this, and then it'll probably do this kind of fucking breakout thing, come back down, and then continue its way up, kind of like that. This is probably how I see Tesla playing out, just in this short term.
Streaming on Peacock and on CNBC Sirius XM 112.
Last day of March and markets rising to end what already was an up week. Let's bring in Bob Pisani for more on what's moving the markets. Hello, Bob.
Hello, and I don't want to take anything away from the tech rally, but the character and the tone of the market is changing in the last week, and I see cyclicals coming to the fore, and that is a very good sign. It's got the bulls very happy. Let me just show you what's been moving this week big. I see REITs, which have had a disastrous month, moving, like Host Hotels. I see some of the office REITs moving. I see housing-related stuff like Lowe's. I see home builders doing really well this week. I see transports doing well. The airlines are having a great week. JB Hunt's having a great week. And most importantly, I see Autos, Ford, AAP, Advanced Auto, General Motors, all outperforming the market. This is a very good sign overall when you see technicals moving, tech stocks moving, and along with these cyclicals. Take a look at the laggards, though. A lot of tech stocks are
It's
not.
fine. I'm totally going rushing out and buying a brand new car. I don't know about you guys. I'm ready to go. Give me, what, 20% interest on my auto loan? Fucking sign me up. Same time last year, it was 0% for 84 months. Literally 0%. I didn't have to pay shit, and I could get a brand new car. Monthly payments. Fuck yeah. Give me fucking 18, 19, 20%. I fucking love that shit. Love it. So what if I lose my job like 12% of all of Americans have in like the last fucking 1 year? It's all good. Being jobless with massive debt and payments is fucking... This is the way, according to the Mandalorians. What you want to do is you want to maximize your credit. Just fucking charge as much as possible. Buy your way out of this recession that's coming. Just buy your way out of it. And then after you do your bankruptcy filings and all that and you lose everything, you know, boom, you're ready to go. Ready to go into the next generation, into the next 10 years. It's going to be sweet. Fuck these delusional fucking weirdos, man.
Even as the PCE, the Fed's preferred inflation gauge, rose
As
less
well,
than expected. This wraps up a wild month for bonds here. Early in March, the 2-year yield spiked above 5%, and then during the banking crisis, had its biggest three-day decline since 1987.
And let's check out the price of oil right now. Up slightly today, right around $75 a barrel. Remember a week or so ago it was about low of $67 a barrel.
Feeling like it's open.
In the middle
what the fuck is this?
March, about 2 weeks ago, I guess it was. That rebound in oil prices leading to a comeback for energy stocks and energy ETFs as well. The energy sector Spider Oil and Gas Exploration, VanEck Oil Services, and Vanguard Energy, all with big gains this week, as you see right there. 6, 7% or thereabouts. This data come from our partners at Insight Investors. We are pulling money out of funds. Nearly $8 million of net outflows from energy ETFs, however, in the last week. More information available on the FT
a tough go.
ETF.
It's a tough go.
Meantime, let's go to Sima Modi.
If I go on my Free From It All channel, I'll have 70, 100 people. But no benefit of that, anything from it.
According to meteorologists from the National Weather Service's Storm Prediction Center, an outbreak of severe thunderstorms that could cause hail, damaging wind gusts, and tornadoes are expected to impact at least 15 states. This just 1 week after a deadly tornado killed dozens in Mississippi. The Environmental Protection Agency has approved California rules to phase out the sale of diesel-powered trucks by 2040. The rules are part of the state's plan to cut CO2 emissions and improve air quality in heavy trafficked areas.
South Africa, swim in shark-infested waters while you're at it. And fucking jump into a volcano in fucking Hawaii.
They will not be able to show support for Russia's invasion of Ukraine. The tournament is set to begin on July 3rd. Tyler?
Tesla, you fucking crackhead stock. Jesus Christ. Still going. Oh my god, I'm a little jealous. I'm not gonna lie. A little jealous there. Somebody canceled. Holy shit.
Hooray for Hollywood. Busted Open's going to Hollywood. Tomorrow afternoon at 3 Eastern, the entire Busted Open Nation is invited to join us for our WrestleMania party at the iconic Whiskey A Go-Go on the Sunset Strip. All of our Busted Open hosts will be on hand, along with plenty of special guests and surprises. Busted Open goes Hollywood. Hear all our WrestleMania coverage on SiriusXM Fight Nation, channel 156, or check out the Busted Open podcast on the SXM app.
When you're young, spring break is about what you take off. As an adult, it's about what you put on. Lounge anywhere, poolside to inside, in new Tommy John loungewear. When you wear Tommy John, you're that much more comfortable, so you can do everything better. Tommy John loungewear, pajamas, and underwear have dozens of comfort innovations, like luxuriously soft tri-blend and micromodal fabrics with 4-way stretch. With thousands of 5-star reviews, people love Tommy John. Tommy John's been covering our butts for 15 years, protecting our most valuable assets in softness and style. That's why they don't have customers, they have fanatics. One Tommy John fanatic raves, I bought one pair of loungewear, and after wearing it for 2 days, got all the other colors available. Everything's backed by Tommy John's best pair you'll ever wear, or it's free guarantee. Shop new spring designs at TommyJohn.com/SXM and get 20% off your first order. TommyJohn.com/SXM. See site for details.
Mitch just delivered in Little Rock. Got paid. Jeff unhitched in Orlando. Got paid. Sue signed off in Atlanta. Got paid. When you're driving for Cloud Trucks, the virtual trucking company,
7% in 2 months. Tesla's up 107%. Like that's not reasonable. And the stock, in case you guys don't know, is 207 times 3 times 5. Is actually $3,105 this year.
Cloud Trucks is only 18%, the lowest in the industry, which puts more money in your pocket. No more
Because of the recent splits. That's fucking retarded.
Make your schedule. Take the weekend off. Carl's done in Dallas.
I'd love to short Tesla, but I can't play it anymore. Just can't do it.
With Cloud Trucks, the virtual trucking company. Sign up for free at cloudtrucks.com/SXM. That's cloudtrucks.com/SXM.
Think of a place that's really perfect. A place where every golfer is welcome and every swing is possible. That's golf's happy place, the PGA Tour Superstore. Get new clubs fit by the pros in our performance studio and find the perfect club personalized for your swing. We'll work one-on-one with you to make sure there are no gaps in your game and help you get the most out of every shot. Visit PGATourSuperstore.com/studio to book your personalized club fitting today.
In it, Netflix, as the one-time disruptor, works to reshape itself into a profitable juggernaut with staying power. That includes cracking down on password sharing, which Atlantic Equity says should actually provide a boost to both active users and revenue. Also, Netflix is cutting back on its filmmaking ambitions, reportedly restructuring its movie division and scaling back the number of releases to focus on quality over quantity. Investors seem on board. Shares are higher today and on pace for their third straight positive quarter. Here to discuss, Gene Munster, managing partner of Deepwater Asset Management. It looks like there's a lot of hope that is being put now into this idea that you're going to crack down on passwords and suddenly all these people who've been glomming on to my paid account are going to go and start their own accounts. What do you think, Gene?
Well, I think password
capitalize on two free days of, like, if it opens at 11, like if it opens at the same price, you just make free money. Pretty much. Problem I think you might run into is you short it and it falls for some reason because it's kind of oscillating. There's really not much that pays this kind of money for a small risk.
About 40% of those have free accounts that are glomming onto it. And if you, most analysts expect that the crackdown will yield about a 10% revenue increase over the next 1 to 2 years, which is good. If you take the best case scenario, which I believe that if the best case, they get 40% of those 92 million to start to pay up, that would add just over 15% to revenue. All of that is good. The problem is that's a one-time bump. Essentially, that's a 6-quarter bump. And soon, as investors always look 6-12 months out, they're going to be talking about more difficult comps because of these the password crackdowns, and asking the question again: what is the true growth of this company? So understand that investors are excited. I don't think this is a reason to own the stock. Keep in mind, the first time that they mentioned this password crackdown was back in September. The stock's up 60% since then. NASDAQ's up 18%. A lot of this is priced in.
The change in revenue, I see what you're saying. The change in revenue would be a one-time bump. The delta is a one-time bump. But wouldn't you expect that many, if not most, of those people who then open their own separate accounts would continue on? And so you get not only a one-time bump, but you get ongoing higher revenue as a result of this.
You get the revenue steps up to a higher base.
Right.
To get the revenue to increase, they would have to either add subs or increase the pricing. So they could increase the pricing. Tech is about growth, and ultimately the growth is probably going to have to come from continued price increasing, which begs the question of what's the real value here. And just quickly, I mean, the competitive landscape's changed over the past few years. We know all about it. Just look at the. So I think that there's. It's going to be tougher for them to grow outside of this password opportunity.
I'm going to do my one-person focus group with my mother-in-law and see whether she'll take her own, buy her own Netflix. We'll find out. All right, sit tight, Gene. We're going to shift gears now. CNBC.com reporting that TikTok and its parent company have spent more than $13 million lobbying U.S. lawmakers since 2019, an investment that appears to have kind of gone nowhere, given Congress just grilled the CEO amid discussions to potentially ban the app altogether. Let's bring in the reporter who helped break that story, CNBC.com's Brian Schwartz. A large lobbying expense, but I can't remember a topic or a time where, recently that is, where Congress seemed as unified as it is right now
AI
about the
still
idea
cooking.
of busting up TikTok or banning it in the U.S.
Yeah, you're right, 100% right. This is something really become a bipartisan effort to attempt to ban TikTok. Now, we don't really know if they're going to actually get to that point. There are a variety of bills that are being discussed in Washington right now that could end up banning TikTok from being downloaded on U.S. platforms, phones, and the like. But right now, there's a lot of chatter, a lot of push in that direction. And it was coming really as TikTok and ByteDance, the parent company of TikTok, spent, as you said, millions of dollars on lobbying. And in many cases, the people we spoke to for this story either shrugged off the lobbying efforts, the in-person and over-the-phone engagements from TikTok and ByteDance to lawmakers on Capitol Hill, or after they would have some of these meetings, and as an example of this, they would move forward with bills that really could hurt TikTok and possibly see it banned at the end of the day. So they don't have that many allies on Capitol Hill. They clearly have a few, but it may not be enough to stop the company from being impacted by future legislation.
Brian, are the lawmakers writing off entirely that their constituents
Showing a little support.
and maybe
23.
They think of it as, well, if it's young people may not either be old enough to vote or maybe less likely to vote, and so I don't have to worry about them.
Tesla just jumped up 20 cents.
A lot of entrepreneurs have a
So it'll be another 100% probably. Yeah. Went from 13 and 14. 13, it was like 12 and 13 to now 13 and 15. 100%. Like from fucking 20 cents. What a joke. Shows you these options are insane on some of these stocks. Yeah, just insane.
Those are a lot of votes for whoever wants to run for office.
Was it a second ago?
You know, if you're a Jamal Bowman,
11:35 I posted. They were 600 and 700%. 11:35. 1 hour. 1 hour 6 minutes ago versus now. Holy fuck. Double.
Sort of impactful legislation on TikTok because the concerns about national security surrounding TikTok and ByteDance. So these are the two debates going on in Washington right now. We're going to see who ends up winning it, but right now, as of today, the people pushing for
6 and 700. 1 hour ago. 6 and 700.
We'll see when it ends up in the next few months.
Gene, when we're seeing this back and forth on TikTok, does it raise concerns for you about the broader issues with tension with China?
Great reporting today, and I think it did a great job of framing in kind of the
Catch it when it says 1500.
Really important. And
come on, go up a little bit. Go up to 207.20, so we can get a nice screenshot. Come on, 207.20. I'm not even a bull here at this point, but I want the screenshot. Let's go.
Between U.S. and China relations, and I suspect, given other geopolitical things that happened between U.S. and China in the last month,
because I had to mess with my settings yesterday, and I'm not sure if I cut out at all. No one said anything, so I'm thinking no, but maybe one of you can tell me if I have or not. I'm showing 2 Teslas here. I don't need 2 Teslas.
He's going to want tensions to cool down.
Was it
Fast
Burr?
forward 6-12 months from now to the next presidential campaign, I think this is going to be a unifying.
It's fucking crashing now. And I closed that early. Closed that early, salty.
When the new president comes in, whatever side they come from, that a TikTok ban ultimately happens. So I think it's going to happen. I don't think it's going to happen the next year.
Gene Munster, Brian Schwartz, thank you both for joining us for the conversation.
Thank you.
Up next, losing orbit, we're going to take a look at the collapse of Virgin Orbit. And as we head to break, throughout the month of March, we celebrate women's heritage, sharing the stories of women leaders in business and those especially of our CNBC teammates and contributors. Here's Wanya Lucas, Hallmark Channel CEO.
What makes me proud to be a woman is watching other women excel. You never know what you can achieve until you test your limits. I was brought up to believe that if you see it, you can be it. And every time a girl or a young woman sees a woman at the pinnacle of her career, she can believe that her dreams can also come true.
Has my mic been cutting in and out today at all?
And paid for by James Ryder Interactive.
Attention, this is an important message for anyone that has been diagnosed with cancer after using such products
Now
as
talking to myself, guys and girls.
and shower to shower.
All right.
Recent media studies have shown that
All good, perfect. All right, guys, enjoy the final hour of trading. I'm going to enjoy it in peace myself, and I will stick with you guys on in the Discord.